All right, all right, all right. Gotta turn the volume down on my Zoom recording. And here we go. Hi, all the way from Illinois. Sounds good, looks good. Thank you, thank you, thank you. Okay.
Good morning.
Yes. Good morning, good morning.
I
I'm just
like that
looking at
way when you say all right, all right, all right. It sounds like that other movie star kind of guy, whatever that is.
Matthew
How do you
McConaughey.
say?
Yeah. All right, all right, all right. All
Party at the
right.
moon tower.
All right, baby. Let's go. I know it takes a minute for me to get everything adjusted here before our live calls because I'm switching over from another system sometimes. But this is what's happening right now. I mean, we did come all the way down to the bottom of this. And I know I've been talking about it for a while, the CME gap, which is in this blue zone down here. We did not quite fill that yet. But I'm going to go over to show you over here. We came close. Look at that. This is the gap right here, the CME gap between the 91.5 and the 93.7, or I would say 91.5 to 93.5 zone. And we are kind of heading down towards it. So what I'm going to do is I'm going to redo these lines so that it's less confusing here. Get rid of some of this stuff. And this is a nice downward trending falling wedge. This could be from here or here, doesn't matter. If we look at this big drop, this was that big drop on the 10th. Where's that big drop? Oh, this is the CME gap. I'm not looking at the price chart. Never mind. So we are basically down at the bottom of this downward trending support line right about here. I'm pretty sure we're probably going to do one of these little numbers where we bounce a little bit and then fill this gap. I mean, it would make no sense to get this close and not do it at this point. There we are. There's the CME gap. Usually they do get filled. I can show you dozens of other CME gaps, right? Like this one right here. This one, very same situation. Like here we're going up to an all-time high, pull back, double top, all-time high, 3 months. There's a gap. There's a gap. There's a gap. Maybe a little gap. But 3 months. This gap right here was filled a day later. This gap right here was filled 2 days later. This gap right here was filled a day later. This gap right here was filled right here, like 2 days later. This is the daily time frame. But this one right here didn't get filled. This was November 11th, 2024, and it didn't get filled until March of 2025. And really filled, double filled before bouncing out. Now, the problem that I have with the CME gap is not whether it'll get filled or not. The problem is that we broke the overall upward trending support going back quite a distance, guys. Quite a distance. So, I mean, we wicked through it here and then bounced back above it, but we are way below it right now. Okay. And so this is the CME gap. I'll show it to you on the price, but we're way below it coming down to this CME gap. But if I go back, so just so you know, that's where the gap is. Just keep that in mind right here. And sometimes it does take that long. So right here, it's at April 2025, possibly coming down to fill it here in November. So 6-7 months, just like this one. That was November, filled in April. 6-7 months. So my concern, however, is not necessarily that. Even if I move this all the way to here, to that touch point right there, we bounced on it, broke through, passively retested, and dropped. The fact that we're below that line is a little concerning. So let's go back over to the chart. Let's go to crypto. The regular price chart. And if I were to touch all of these upward trending, or these wick downs, these big touch points, if I go all the way back to the actual bear market bottom here, guys, if I really try to dial this in exactly, went through resistance, breakthrough, support, breakthrough, resistance, breakthrough, support, breakthrough, support. I probably need to touch these here. So if I just dial that in to touch those right there, everything else still matches. Right here, we hit it. We hit the downward trending support, wicked through this line, the same upward trending support line, wick through, but just wicking down to this, which was previous resistance before bouncing out, staying above that line. And then here, hitting it, bouncing, going below it, retest, resistance. So support, resistance, breakthrough, come through, and drop. So we are below the overall upward trending support line. Now I could take a couple different views. Let me just draw a different one from here. This is down at 48. Let me touch it here. I'm going to change the color so you can see it clearly. Let's just go with blue. And if I touch just these, just since then, that's you can't see that very good. These wicks, that wick, and really line this up as much as I possibly can. You will see probably right to there. We have, so let's just forget about this one. I'll just put that one right there so you can see it. Boom, support, breakthrough, resistance, and then drop. So we are now below the overall upward trending support, going back quite a ways. And we retested it as resistance, creating a big bear flag that we just broke out of. The downside. And then this right here, guys, the 98K support. I mean, that's a long running support and resistance line going all the way back to November of 2024. So a year ago, resistance, support, breakthrough, resistance. Even though it went through, it didn't hold above it. So that's resistance. Breakthrough, support, breakthrough, resistance, breakthrough, support, breakthrough. Okay, so two negatives. So let's go look. Let's just draw the CME gap here, just so we know where it's at. It's right here between 91.5 and 93.5. And obviously I had this circle already from the last call saying that that's what we're going to hit. And as you can see, it came right through where the circle is. And so I can get rid of that now. I mean, guys, just like when I was last week when we were up here somewhere and I was telling you we were going to hit 98, it came right to it and bounced. But now, and I did say in our many updates in the Discord signal channel that if it cannot hold 98, then we will be going to 91 to 93. We wicked down to 94.5. Let's just see, where did we wick down to?
Looked like it went 94, 480, 484 or something.
Yeah. It went to right up here, 94, 177. And it's just bouncing. But why is it bouncing? It didn't get to the CME yet. Well, it's bouncing because we have a very solid downward trending support line that has been hitting. If I even touch these exactly where they should be, where this wick all the way came down to, we hit it and bounced. Look at this. Watch this, guys. It's kind of crazy. We hit it here at 98. Hit it, went through it here and retested it. I mean, bounced on it and then came back up and retested that red line. That's the one I said that we broke through. And then we dropped down further and then came back up and retested it. Retested this line right here, right? All right. That's what we're doing right now. We're retesting. And if I bring this over, here's that 98 again. That pesky 98. So we got, we just keep hitting support, breaking through, retesting as resistance. So what I think is going to ready to happen, guys, we're going into the weekend. I mean, we're going to possibly see this and maybe even dip into the 80s before coming out. That will be a great entry. I will be long. I am both long and short still. I hedged because I didn't want to get out of my longs because I do believe that we are going to have a big pump to the upside. But there's an old saying in trading and in crypto is that how do we know when the bottom is in? How do we know when it's time to enter on a bounce, on a big drop like this? The rule of thumb is that if it's still hovering down here, then the bottom is not in yet, because the bottom, when it's the bottom, it doesn't give you very long to catch it. Most people don't catch the bottom because it doesn't sit around giving you time to catch the bottom. Normally when it wicks down and really hits a bottom, it's like this. Like this. Bam, and it bounces right back up very quickly. You don't have time to catch this down here. When people up here, people are like, well, how far is it going to go? How far is it going to go? You'll know. I mean, look how quick it sucked right up. Billions came back in. That's not even a candlestick. It's just a wick before it came all the way back up.
Nico,
Yes.
if you put like BDC on weekly and put it on line, it will give you like a better picture. Weekly and the line.
Yeah. I don't
Put
like
the line chart and see.
Oops, hold on. Yeah. I mean, it's breaking through that upward trend line right now. Actually, it already did. I don't know.
You don't think we might go to 78 or 70 if it doesn't hold from here? It's like I want to break there and then retest again and create a perfect head and shoulder and dump. That's what
I mean, is it
I'm
possible?
seeing.
Yes. I mean, then we're looking at bear market territory, guys. But I think it's a little too soon for that to happen. I think we could have another still parabolic move to the upside before going into a bear market. But there is no for sure anything. There is no rhyme or
Yeah.
reason sometimes. That's the problem. Like a lot of people are like, yeah, but the bull market doesn't end until the end of the year. Well, that's not necessarily, that may be true. The bull market is considered end at the end of the year, but the top doesn't mean that it doesn't mean that the top is going to be at the end of the year. When I show you guys the 12-month time frame, I try to make this make sense as best as possible, but when I show you this over here and I go to the 12-month time frame, let me get rid of all this stuff so you can see it clearly. I got it all drawn up from last night's webinar. So this, I have a feeling if I remove all the lines, this is going to remove it from all my charts, but I'll just do it anyway. Yeah. I didn't want to do that. Okay. So if we look, what I keep trying to tell you guys on the 12-month is that, like, this is the bull market top back in 2013. You count 4 candles, 1, 2, 3, 4. This is the bull market top in 2017. Count 4 candles, 1, 2, 3, 4. This is the bull market top in 2021. Count 4 candles, 1, 2, 3, 4. We are in the 4th candle now, and we have 1 month and 18 days left. When 1 month and 18 days goes by, and it is now January 1st, because this candle will end on December 31st. The next candle will start. Whatever the top of this candle was, historically, has been the top. But where this candle ends in 1 month and 18 days could be much lower than where the top was, because it's already went all the way up to 126, and it's starting to come down, starting to come down, starting to come down, starting to come down, right? If it keeps going down for another month, it gets down to 70, 60, 70K, and then the next candle opens, then I'm afraid that 126 was probably the top. But if you wait for that next candle to open and say, okay, well, this is the beginning of the bear market, yeah, it might be, but you would have not caught the short from 126. You would have had to short 126 in order to really catch the top. Like, so you see this top here, the top for the last one was 68K, but it didn't open the next candle until it was down to 46K. That was like a $20,000 drop from the top before the next candle opened. So that would be like us going down to where we're at now, basically. So this one back here in 2007. I'm sorry, go ahead.
Yeah, coming back to where we are now, I got stopped out on a short on Bitcoin. Is it worth going back in on what you've just said, or I mean, it's still got quite a way to go if it's going down to fill that CME
back
gap.
in, going back in on what?
Yeah,
Along
on a short.
Oh,
If it's going to fill that CME gap.
Yeah, I mean, that's where I think it's going, but there's no promise of that. I mean, so.
Oh, I know. I understand that.
Yeah, I mean, if it bounces right now and starts to climb back up, then that CME gap could get filled at another time, or I just can't imagine it being that close to it and not filling it. So, I mean, my guess is that it will get filled sometime over the weekend here, but I would wait for the bounce, to be honest with you, because I mean, if you go short now and it fills the gap and bounces and you get out, that's great. But if you go short now and it fills the gap but keeps going down, you'll be glad, right? You'll be glad that you're in that short. But if it wicks down real quick and comes back up, you could be negative, and then it may not double bottom, it may just go back up from there. But the other thing is that if you don't get in a short right now and you wait for the bounce and it hits 90, let's just say, and then you enter long, then you have a good chance of riding it at a really good entry. But then you would put a tight stop loss. So in case you're wrong and it does start to drop after that lower, then it'll take you out. You could just reverse the position. So I mean, it's about a timing. I think it's more about timing than I mean, you could technically do a short now, but let me just go back and show you why that might not be a good idea. Because if you, let me get offline chart right here, go back to candles. If I go down to a lower time frame right here, if I think that it might be coming down to fill this gap, but you go short now, what if it, and what it could do is it could come down to here, bounce, and it could come all the way up to here and then come down to here. So you could just be going positive, negative until it hits. I went short up here when it broke this 98K. So to me, that was more of a clear indication that we were going to drop further. So that was the best entry. But you said you did get in on that, but you got stopped out.
Yeah, I got in on that, but then I put my stop loss too close and got stopped out. So I was
So you
just
got stopped
tempted
out
to
in
go
profit
back
at least.
in. Oh yeah,
Yeah.
yeah, but I was just wondering whether it's worth going back in and putting a tight stop loss on it, or whether you just wait to see what happens.
Well, looking at it right now on the 10-minute time frame, I would say now would be a good time to do that, only because we did come down and test the bottom of this this downward trending support line. We actually wicked through it, so, and came back above it. So that might be a different sign right there. So let me just then again, this is the lower time frame. So let me just try to dial this in a little bit, see if I have this in the right spot. Yeah, maybe. It's hard to say. It's hard to say on that one. But the reason why I say now might be a good time is because this line right here is, I don't like this color. I'm going to change the color. This orange line right here is a long running downward trending support line for Bitcoin going back. Let me just go to a higher time frame so you can see it. That's this one right here. As you can see, support, even this long wick, support, and then we wick down to it. And we are under it right now. And on the lower time frames, we're actually retesting as resistance. So either we're gonna, so here's why it's a little scary to tell you too, because look at this long wick down. We have a long wick down to 94.1, and then that's sucking back up. So it is possible if we get back above this line that we get back above that line, and we're now going to come up a bit first before we drop further. It could literally go like this and then possibly come down. So there could be a little upward action first before coming down. But right now, as we sit, we are literally below this orange line, which is the first time in a while. Now, there were some wicks over here that wicked down below it and came back up. So that's why you got to be careful. But if I go down to a lower time frame, the 1 hour, let's just say, you can see it went below it, retested, dropped a little bit, and is coming back up to retest again. And these are lower highs, right? So we have high, lower high, lower high. Is it going to break back above this orange line and hold and then climb back up and still stay in this downward trending falling wedge? Or is breaking that line significant? If it retests as resistance and starts to fall, maybe I would wait. I would wait if it starts to fall a little bit, because technically speaking, on these breakouts and these retests, what we want to see, and it kind of did it already. You can see it broke through, came back up and retest, and then made a lower low. That's usually when you enter. But it came back up, and it's coming almost all the way back up to that same line. And maybe it is at that same line. And as long as we continue to have lower lows, which so far that's what's happening, then yes, I think it will go down further. But so my concern is if it does pop back above that orange line, then it might be down the road over here on Saturday, Sunday, or something like that, when it finally does come back down again. So you would be entering now a short and then going negative for a little while until it comes back down. So I would first wait to see if it really does hold at this line. I'm on the 1 hour. Anything under the 1 hour time frame, if you take this, run the same support line going all the way back to like July. After that first all-time high of 123, we've been holding this support line. And this is like a divergence. This is like a widening gap. So if you look here, we had a high at 123, a higher high at 124, and a higher high at 126. But at the same time, I'm going to change that to orange so it matches. At the same time, down here, we're getting lower lows. We had higher highs, but we're getting lower lows down on the bottom. So it's kind of like a widening channel or widening gap. And this was the most recent high. This is now the most recent low, and we just broke below the bottom. And so my concern is that, yeah, the CME gap is close by. Yes, I do think we're going to fill it, but are we going to do it right now, or are we going to come back into this channel and do it over here somewhere? So that's kind of a timing thing. But if you're okay shorting right now, you're going to have to put a stop loss up here, away from it, because it's possible that it does come back up. Also, keep in mind, it's not just this orange line that it's below right now. It's also below this yellow line, which is the 98K. It's also below this yellow. You guys mute yourself out if you're not talking to me. It's also below this yellow line. And it's also below this red line, which is the long-running upward trending support. So that's triple bearish right there, guys. We broke the upward trending red line, we broke the 98K, and we're breaking this orange one. Right? So in the short term, now the only thing that it could be heading towards right now is the CME gap, as far as I'm concerned, because there's really no other reason to be this bearish right now. But if you then look at, if I go to a much higher time frame, we've had several falling wedges where we broke to the upside, hit the top, falling wedge, wicked down below it a little bit, broke to the upside, falling wedge, wicked down below it for a little bit, possible to come back up. So we need to get back above that red line. We need to get back above this 98K and that orange line in order for us to break out of this falling wedge back into the upward trending channel. And so until that happens, this is all bearish down here underneath this red line. And so, and as Rose mentioned, when we looked at the line chart, if we don't hold at 90K and we get below this line, below the CME gap, we fill it, but we get below it and we hold as resistance, then we could come down even this low again. Sure. Is it possible? Yes.
78, it's my next stop, I think. Actually, I was on a long too. Otherwise, I would have take profit. I'm like more than 1000% up, but I'm on a long because I was keeping the long. That's my mistake. Yeah.
Yeah, good for you, Rose. Good job. You getting it. You got it. You're doing good.
I'm learning. I'm learning from you guys. I want to get good at it.
Yeah, and you're involved and you're engaged, and that's why. So guys, I get text messages from some people in the group, like on Facebook Messenger. They're not even messaging me in Discord. They're not messaging me. They're not asking the questions on the live calls. They're messaging me in Facebook Messenger. And usually it's like, I don't know what I'm doing wrong, blah, blah, blah. And I'm like, have you been on any live? No, I haven't been able to get on live calls. Are you watching any of the replays? Well, no, I haven't been able to. Okay, well, I mean, I don't understand how you're going to learn if you're not paying attention to anything we're teaching. So no offense to those people, but other than it's hard for me to help you over and above all the help we're already giving that you're not paying attention to. You know what I'm saying? Know what I'm saying? So I doubt that person will hear me say that because he's probably not on this call. But if he is,
I thank you for everything because I'm learning from you actually, and
no, I
so nice.
Yeah, I know you are. No, and I appreciate it because you not only ask good questions, but you bring value because you're paying attention and you're telling me what to look at because you've already saw something on the chart, and that's because you have critical thinking. You're able to look at things and.
But I'm learning all from you, Nico. Even Bill said, "Oh, your line look like Nico's."
Yeah. Listen,
Thank you
guys,
so much,
I'm
guys.
certainly not perfect, and I certainly don't know it all. And there's traders in this group. There's traders in this group. I will fully admit that there's traders in this group that make higher percentage gains than me. I mean, ridiculous 3,000% gains at 300x level. I just don't trade. I used to do that. I used to trade with ridiculous leverage and swing for the fences and have crazy gains. I just don't anymore, because the more money you get in your accounts, the less risk you want to take, because there's two rules. First, you obviously want to make money, but the rule number one is don't lose money. And so I'd rather preserve capital at this point and wait for the bigger moves. And so the older you get, the wiser you get, the longer you've been doing this, the less you trade, because you're waiting for the real big moves in the market. And right here, what I'm showing you here, this is a big thing happening. I mean, it's a great entry to go long if we're bouncing on this support line, but if we're falling, it might be shorting time if we're falling below this. But I'm not convinced yet that it's not going to suck back up above this line, because it can do that. It might just need to fill this gap, and who knows, we could have a quick, very quick recovery. And it could just be shaking out the weak hands, guys. It could just be, let's just go over here and look at the liquidity pool here and see where all the money's at, where all the money is getting ready to get. So we do have a lot of liquidity above us up here at 98. Is it going to come up there first, or are we're going to sink below here and take out the, I mean, we came down to the CME gap, 94. We came down close to it, but we didn't quite hit it. This doesn't show the CME gap. This is just showing liquidity. So we got, these are people that are over leveraged up here that if we pop up to 98K, they will get liquidated.
Nico, can you go over the heat map like in lamest terms? Like, are we just looking for that yellow line or the yellow color?
Yeah, so the yellow, the bright yellow is where the majority of money is sitting. That it's called the liquidation heat map. This is where there's a lot of shorts or a lot of longs sitting there that will get liquidated. It's not entries where they will make money if it gets to that point. It's where people will get liquidated. Bill, are you on here? I don't know if you want to expound on that. Bill might not be on this call today.
No,
he was
I'm
up late.
on. Oh, sorry
Oh, you
about
are?
that. I was in the kitchen. Yes, sir. The liquidation heat map shows where traders are upside down and they're going to lose their margin. And it starts at the darker color and then goes to a lighter blue, green, and then yellow is the hot spot. Yellow is where the most traders are going to lose their margin. So kind of like Pac-Man. You're going towards the yellow dots.
I agree with you 100%. I got liquidated the other day. I'm serious. I got liquidated. I got no. It's when a couple of us got liquidated, but that's all right though. I'm back. I'm back though.
Good, but that's what it's showing.
A dumb question, but if everybody can see this chart, and you know where you stand, if you're in the yellow and you're going to be liquidated, why don't you get out?
That's a great question.
Listen, the only thing that stops anybody from getting liquidated, to be honest with you, is the mental focus of you think, you see that you might be up, and all of a sudden you just get wiped out. The whales come in and they just wipe you out. You don't even see it coming. You just see your numbers, and all of a sudden the screen just goes dark, and everything you got is gone.
Okay.
Everything.
Also, just to answer her question, was that Marion? Hi, Marion.
Yes.
90% of the traders don't look at this. They don't know where the liquidity heat map is or the liquidation zones are. The reason why there's so much money sitting here is because most people think the same way. When they're looking at the charts, the majority of retail traders are going to put their entries and their stop losses in the same spot. And the retail, I mean, the big players, the big fish, the whales, and the institutions know this. There's some famous traders out there that will tell you that if you're going, and I think we shared this in the Discord somewhere, And there is an explanation of this, and Bill can point it out. But if you come over here to, it's 1, 2, 3, 4 down, projection, long position, short position. I have them starred so they stay at the top. But let's say I want to do a long right here. I'm going to click this. It's going to put this on the board. Okay. And I think it's going to go up to the top of this overall channel. And I'm going to go long. Let's just say right here where it's at. Let's just say hypothetical, right? This is kind of telling me that my risk to reward ratio on this is 1.8. So if I want a better risk to reward ratio, I'm going to lower, oops, hold on a second. I'm going to lower where my stop loss goes. And as you can see, my entry is going to go lower and my stop loss will be down here further. Now I'm at a 3.7 to 1 risk to reward ratio. So what some people will tell you, what most people do is they just go long right here and put their stop loss right here. That's what most people do. And so everyone does that. So therefore, all the liquidation is right here. All the liquidity is right there. Right? What some smart investors do is, since that is they'll use this tool right here and they'll put this on there and they'll see if they were to enter right here where it bounces on this and breaks out, then their stop loss is telling them to put their stop loss right here under at what is it, at 99.6 or 90,000, 90,000, something like that, whatever this bottom of this is. So most people will go ahead and go long and they'll put their stop loss right there, and then this will come down and wick down and hit their stop loss along with everyone else's, and those people will get liquidated or taken out, whatever the case may be. Or maybe it's not their stop loss, maybe it's their liquidation, whatever the case. That's a liquidation heat map. But those people get taken out, and then it still goes in the right direction that you wanted it to. And a lot of people get very frustrated by this, and they're like, "Well, it always hits my stop loss, and then it just goes right where I wanted it to anyway. So it must be seeking me out." Everybody has said this at one point. It must know exactly where my stop loss is. Somebody's hunting me. It's called stop loss hunting, right? And it's true, they do, but they're not looking at you personally as an individual. They're looking at the majority of where all the money is sitting, all the liquidation is. Okay, so how do you avoid that? Well, what you do, what's that?
Put a stop loss.
Well, yeah, you can put a stop loss, but where do you put it is the question. So you can use this tool right here, and instead of entering here and putting your stop loss here, you put your limit buy order here. So when everyone else is getting stopped and liquidated and stopped out, it's triggering your long order. Boom. And you go long there. Your stop loss is way down here somewhere. Bill, do we have that training somewhere in the group?
I've got the long and short position tool training right there.
Yeah. We have the, was it, I don't know if it was Trade, Travel, and Chill or if it was some other girl that
on stop losses.
Yeah.
The stop loss. Oh yeah, that's in the help desk still. That's pinned in the help desk at the bottom.
Yeah. So
I'll share the link in 2 seconds.
Yeah, guys. So if you go into the help desk over here and go over to pin messages, this is an excellent video to watch, guys. It's not our group. It's another girl who has her own channel and everything. I don't normally promote other people's stuff, but right here, stop loss strategy. This is a great video. It's from Trade, Travel, and Chill, and she explains exactly what I just said. And
You got a trailing stop video as well?
Yeah, I'll post it. He asked if there was a trailing stop. I'm pretty sure I did one. I'll look for it.
So, because I'm trying to go long on 2 positions on Bitcoin, to the 108 and the 111. But it's telling me I want to put both of them down, but I'm not sure how to do it.
Yeah, who is speaking right now? Who's the guy who asked about the stop loss? I mean, the trailing stops.
This Mustafa.
All right, we can't hear you very good. It's very blurry, and it doesn't show your name on the screen. It just says Zoom user. So it sounds like you're in a busy room, but when you come off mute, so it's very difficult to hear you. But if you want to type I don't know if you can type it in or go into a quieter room. Your microphone is very muted. So I just wanted to let you know that because it's very hard to hear you. But I think you said something about trailing stops, and I'm going to tell you why I don't use them. You're welcome to use them, but I don't use trailing stops for this reason. First of all, I'm always looking, I'm paying attention. And by the way, for the gentleman that asked earlier, we are bouncing at this, and it does look like it's starting to come down. So this could be another short entry. But the reason why I don't use trailing stops is because if I go short right here, and I'm expecting this to come down, and I have a stop loss at 10%, and as it's going down, I have a trailing stop, and every time this goes 10% further, this drops 10%. This goes further 10%, this drops 10%. This goes further down, and my stop loss drops more automatically. But nothing does this. Nothing goes straight down like that. And what lots of times happens is that this just comes down to a, maybe a resistance level, boom, and bounces up like this. Hits this resistance, bounces up, hits this support rather, bounces up, and then hits this previous support as resistance, boom, and then continues down. You just got taken out because your trailing stop got too close. And then it continues where you want it to go. Now, I'm not saying you can't use a trailing stop or use it effectively. You got to know what you're doing. I'm just saying I don't use it because I'd rather leave my stop loss out of the way and then manually move my stop loss into profit. And then when I see that it's already done this and already pulled back and consolidated and already hit a resistance level, then I can move my stop loss down to right above that. And then when it's done it again, okay, when it's come down further and went through the next support level, in other words, it did this and then came down and went underneath that support and then already hit that as resistance and started to drop, then I will move my stop loss down above that. But I don't want it to automatically do it. Me personally, I don't trust it to do it exactly where I want it to do it. Because if you just do it at 10% every time, it's going to get triggered. It's going to get hit more often. That's all I'm saying.
Now, Nico, let me ask you this. When you're trading, and this is for Bill also, when you're trading, do you have a particular number that you see that you say, okay, I'm moving here and this is the number I'm looking to make? And, is that, because I feel like that's more of a strategy, having the number that you want. And then the greed comes in when you get your number and then you sit and wait to try to get more, and it becomes risky at that point.
Yeah, I think the biggest mistake most people make is greed. And this is a natural human emotion. Every one of us have it. I'm greedy too. And it all comes because we all want more. And if it's something is going in the right direction, and let's say you entered short up here, but you only used 1,000 contracts and you're only risking $100, but you're way in profit here. And you're like, damn, I wish I would have risked $1,000 instead of $100. I would have made a lot more. So what you do down here is you increase your contracts, you increase your leverage, you add more everything, and then boom, it goes against you now. And now you're going negative and you're like, shit, what is that? That's greed. So what the point I'm trying to get at is, when you talk about, do I have a number? What I always tell people to do, especially when you're new, the number is, okay, guys, first of all, there's an old saying in trading, you will never go broke taking profit. Okay. Take it. Okay. But Nico, you said the TP is going to be down here. Why should I take profit here? Well, if you got in up here and you're way in profit here, do you want to risk it? Put your stop loss right above that. And if it hits it, it hits it. So what? You still got out with huge profit, even if this continues down further. So, but a lot of people.
Now, would you say, and I'm not cutting you off, I want you to continue. Now, would you say take your profit and then jump back into trade again?
No, not necessarily, because that's greed as well. You could, but you want to make sure. So if you got in up here, let's just say, big profit, and it bounces here, you might say, oh shit, it's coming back up. I'm going to close this out and take my profit. You take your profit here. So you made good profit from here to here, but then it starts to go down further. Okay, once it starts to drop here, should you get back in? No, you should wait to see if it's gonna bounce again on this support, the same support it bounced on. Wait to see if it breaks that. If it breaks that, okay, then you could re-enter short. See what I'm saying? So you don't want to immediately just get back in because it could be on its rise now. Like this one right here, if I went short right here, here's my short, it right when it broke this yellow line, and I could have taken profit right here. That would have been a nice profit, but it's coming back up and retesting. I just stayed in. I don't even have a stop loss on this. I know that's dangerous. My liquidation is up here, but now that it's held support here, I am going to put a stop loss right now, right in front of your eyes, 97,600, let's just say 97,600. I'm going to go down and put a stop loss on here right now. That's my BTC short, 97 stop loss, 97,600. Okay. That's a 14% gain if it hits. There it is. The reason why I put it there is because that is right above the downward trending resistance. I mean, the downward trending support that it is now holding as resistance. If it gets back above that, I don't want to be in this short anymore. So I don't care. But now if it drops, and bounces on this, why would it do that? Because that was already a support level right here. Boom, it bounced. I mean, if it goes down and gets below that and goes through that and then holds that as resistance, right? It was support. It goes through and now it's holding as resistance and starts to drop further. I will now move my stop loss down to that level, right above that line. Because if it breaks back above that, then that's no longer resistance. And I'll just take whatever profit I get. Now, if it, I'm just going to leave that there. Now, if it comes back up above that and hits my stop loss and then continues down, greed would be me jumping right back in. Don't want to do that either. I'll just take the profit and I'll sit and wait to see. And then I go and reevaluate. Okay, what's coming here? Why? How much further can it go down? Well, if it's close to where I think it's going to go and then it's going to bounce, I'll just wait. There's no reason to risk that for that last little stitch right there, right? I mean, if you're robbing a bank and you're in the vault and you already you already had everyone at gunpoint and everybody's on the ground and you're in the vault and you see on the clock you got 3 minutes to get out of this bank before the police show up, and you filled all your bags, but there's still a pile of cash in the corner in the safe, are you going to spend the next 3 minutes trying to get the rest of that cash? Or are you just going to get out with what you got? You already got enough.
What you got. Yeah, and that's what I kind of had to do.
But you ever see the movies? What do?
Yeah.
They look at the clock. They're like, they see all that money and greed kicks in and they start trying to fill more bags and they start stuffing it in their pockets and all of a sudden now the cops are breaking in the door. So the point is, guys, is don't get greedy, right? If you're in, by the way, when you take profit, even if it could or does continue in that direction, and even if you could have made more money if you would have stayed in, you still got out with profit. So what's the old saying? A bird in the hand is better than two in the bush, so to speak. It's better to have taken that profit, closed that trade out, taken the profit, than to and live to trade another day, first of all, with more money. Now you got more money. You're growing your account. That's the goal. And it's not like you missed anything, because that little extra more money that you could have made, that happens 20 times a day. So why worry about that right then? Just wait for the bounce and get back in the other direction, or wait for it to break another milestone, another support level. Because if it does continue down here and then breaks through the CME gap, let's just say, and holds that as resistance, then yeah, I'll be shorting again. But I will also put a tight stop, because I do know that it's possible just to wick down and come back up. And if it does come back up and then let's say it comes back up and then holds that as support again, I will reverse that short. I'll take that tiny loss, reverse the short, and then we'll be on our way back up, and I'll make back whatever I just lost on that stop out. So that is the gamble. You are risking tiny stop losses here and there in favor of a direction that you think it's going to go. But if you're wrong, you can always make that back on the reverse. So, but the problem most of you make, not most of you, I would say the problem, for those of you who are having big problems, the majority of you is that you either have no stop loss or you move it far away to avoid it getting hit, which serves no purpose, because the whole point of a stop loss and the whole reason it's named stop loss is to stop your loss. And that sounds like what you would want to happen, right? But it seems to me that psychology makes us greedy enough to allow it to go further negative, because we're hopeful, or we think, well, it's not going to go that much further. I'm sure it's going to turn around anytime now. When the reality is you could have been out of that trade and not chewing your nails off and waiting for the right bounce instead of watching it go further and further negative. So, I mean, recently you see, if I go into the trade signal channel, let me just scroll up here. Not that long ago. Let's see. I don't know where I did it here. XRP moved, stop loss moved into profits 245. TP moved to $3. Not trying to limit how high it can go. So we'll continue to just move stop loss up as it climbs. Going to bed. See you tomorrow. Woke up, stopped out, and re-entered long. I was stopped out. Okay, but I was stopped out in profit. Re-entered. Stop loss moved to 236. Needs to hold above the overall upward trending support. Blue line at 240. Always possible for another dip before the move up. A lot of volatility in the market with all the news coming out. Just dropped again below the upward trending support line. Stop loss hit again. Stop loss hit again. Sometimes it happens. Third time's a charm. Waiting for the bounce. I don't stress over it. I don't care. I have it there for a reason. Okay. So I think, but you know what? Sometimes some of you, when I say re-enter or stop loss hit again, some of you will do it and some of you won't. Some of you will do it once. You'll re-enter once, but you won't do it twice, or you definitely won't do it 3 times. You'll be like, oh, he don't know what he's talking about. He's got stopped out twice in a row. And I say 3 times, third time's a charm. Anybody been in here long enough to tell me whether I'm right about the third time's a charm or not? But
I get it. I got stop loss.
yeah, I mean, the reason why we say third time, and I think it was Liga who posted in the group the other day about something else, probably non-related, but stock market or something. But I told her sometimes 4th time's a charm, and she agreed. But I mean, the point is that it's not that we're wrong in our prediction of the direction; it's that our timing can be off, right? Okay, it's like I think it's going to go bounce and go up to $4, but maybe it's going to go down a little bit in the short term first before that happens. I'm thinking it's going to happen right now. So I go long and I put a tight stop loss in case I'm wrong. I'm wrong. It just stops me out. Okay. I re-enter because I still think it's going to do that. It goes up a little bit, comes back down, takes my stop loss out. I re-enter and then it finally does what I wanted to do. Could I have waited a little longer on the first 2 times? Yes, I could have. But if I was right the first time, then we don't have to re-enter. And sometimes we have to re-enter. It's not a big deal. To me, it's not a big deal. But some of you I know get stressed out with these little stop loss dings. And, I used to read messages of people, I don't like putting such a tight stop loss because it always gets hit. Well, if it's always getting hit, then, okay, well, maybe there's two things. Either it's too close or you're just, because before, guys, I used to put a signal. I used to say stop loss at 10%. My 10% is different than your 10% sometimes. So you put 10%, but maybe your leverage is different and your contract size is different. And all of these, the dollar amount of your margin is different. So your 10% away is going to be possibly different than mine. But you might say, well, 10% is 10%. Doesn't matter whether your price is different or your, contracts are different. But the point is that it's all relative to what you can stomach losing or what you, how long you can stay negative before you get nauseous. I don't want you guys to get nauseous. So I use tight stop losses because I don't want you to stress out and chew your nails off. But at the same time, when you get good at this and you understand it, you can be flexible. You can adjust your stops a little bit. You can, especially when you know where they should be. In fact, what I just told you a minute ago about looking at that Trade, Travel, and Chill video in the help desk, I should just play it right now so you guys can really get this, because rather than expect you to go, because this is a good learning experience, in my opinion, let's see, where is it? Stop loss strategy right here. Let me just play it.
Hello, traders. In this video, we're going to introduce the Smart AI indicator, which we developed in partnership with OpenAI.
So you've decided on a trading strategy that's going to be the trading strategy you use moving forward. You wait for the right setup and the right trigger to take your trade. All your rules are met, and so you enter the trade, placing your entry order, your stop loss, and your take profit. A few moments later, the trade starts going your way, your confidence is increasing, and you start to feel joy that your strategy is making you money. But then you check your exchange that you placed your trade on and realize one thing: the trade pulled back before it went the way you predicted, and that pullback hit your stop loss, and you were exited from the trade at a loss before it even had the chance to hit your take profit. The reason this happens is because when placing stop losses, most traders believe that placing a tight stop loss means they will lose less if they're wrong. But not only does a thought like this show you don't understand risk management, it also shows that you don't really know how to place a stop loss correctly. You see, a stop loss is not designed to take you out of a trade with less of $1 loss if the trade doesn't go your way. A stop loss intention is only to take you out of your trade if your initial trade idea becomes invalidated after entering. For that reason, you need to delete the thought of a tight stop loss, and you need to replace this with my stop loss goes where it needs to be. Let's listen to an actual market maker about why this is so important.
Institutional traders will buy at the level, and most traders will put their stop loss a tick under the last low, and they will invariably put their stop loss at exactly where the institutional orders are. They will say to themselves, well, we know pretty sure that most of the stocks will all be crowded around this obvious level. So they will bid the market at that particular level. All you need is one person to chicken out, and the markets are going to go where the bids are, and all those people will be taken out.
How do you know where it needs to be? Well, whilst you hit that like button and subscribe if you're not already subscribed, I'll explain this in more detail. Regardless of the trading strategy you use, whether it's the TBD system that we teach over here at Trade Travel Chill, which, by the way, the link is in the description, or a trade where no matter what strategy you use, for the most part, we're all trying to profit from price moving in a trend. Either a trend to the upside, where we will open a long position, or a trend to the downside, where we will open a short position. Our goal as traders is to identify when that trend is about to change, to either open a new trade or to take profit on an existing one. In order to identify this, you must be aware of two things. Before trend changes, there is usually one thing that happens, and that thing is called a peak formation.
Hello traders, in this video we're going to introduce the Smart AI indicator, which we developed in partnership with OpenAI.
This is the first thing you
Sorry, guys, there's some ads here. Let me just
need to be aware of. In an uptrend, it's a peak formation high. In a downtrend, it's a peak formation low. That peak formation will often trap traders, which is the second concept you need to know. So what is trapping traders and why does that happen? You see, when we trade any market, there's always someone trading against us, and that entity is known as the market maker. If we're long, they're short, and vice versa. This has to happen because without a buyer, seller's orders cannot get filled, and without a seller, the buyer's orders cannot get filled. This is the market maker's job, and this is what keeps markets moving. When a trader uses leverage, they are partially borrowing funds from a market maker. So when price is trending one way, the market maker is lending, and eventually they need to take all of that back. And they do this by issuing a trend reversal and essentially liquidating all the traders who borrowed funds. But the step before liquidation is where the trap happens. The market maker needs to keep traders in an open position before they can reverse the trend. Otherwise, they don't get to liquidate and collect back their funds. The trap traders essentially become the traders that open their trade in the wrong direction at the very end of that trend, the peak formation. So by now you're probably wondering, why is Annie telling me all of this? I just want to know where to place my stop loss. Well, here's why. Let's think about this logically. If we now know that a peak formation is where the market maker traps retail traders, then by default, that means if price were to return to that area, those trap traders would be released. Why would the market maker trap traders just to release them? You're right, they wouldn't. And therefore, logically, the best place to put your stop loss is going to be clear of the trapped traders as we're making the assumption the market maker is not going to allow price to return to that area. So let's go through some examples of this. So using this example right here, we can see that this is the peak formation low, and we can identify that the trapped traders are in this wick right here. And the reason we believe that is because price has not returned there. So once we believe that the peak formation is in, that means that we are safe to enter a trade, and our stop loss needs to go under the trapped traders in the case of a long position, because we make the assumption that the market maker will not let price return there. As far as the target, you can look to the other side to see where were the last trapped traders, as it is likely that once the trend
No, just so you're here to visit.
by
Just
that stage, those traders were already liquidated anyway. So we have this area here, which we can identify as the prior peak formation high, and that would be our prior trapped traders. So for this trade, we can try to run our target up to that area, and we always front run that a little bit just to make sure that we get our take profit and we don't fall short by a few dollars. So in this case, you can see here that this trade would have hit your take profit before it came back down eventually to the stop loss area. Now, a very common mistake that people make is that they believe when they use the risk to reward tool on TradingView that this number down here is how much of their account that they will lose if the trade goes against them. So you can see here in brackets it says 0.96. This is actually incorrect. What you need to be paying attention to on this tool is the risk to reward ratio. When you see a number next to that, in this case we have 6.74, what this is telling us is that whatever I'm risking in this trade, should it go against me, I will receive 6.74 times that amount as my reward if it hits my take profit. So my job as a trader, and you need to do this for every single trade, is you need to be able to calculate if the trade goes against you, you will only lose 1% of your entire trading account per trade. To give you an example, if I didn't enter the trade here, and let's just say I decided to enter around here instead, but I want a tight stop loss because I'm worried, and so I put my stop loss like this, you can see in a case like this, I would have been stopped out of this trade because I was of the belief that this number in brackets right here is what matters. That's incorrect. If my stop loss was where it needs to be below the peak formation, now you would believe that I'm going to lose 2.49% should the price revert. Also incorrect. Regardless of what this percentage number is right here, you should always calculate your maximum loss to be no more than 1%. And nowadays, crypto exchanges make it very, very easy for you to calculate this. On most exchanges, you can do the calculation directly on the exchange. So I'm going to use this as an actual trade example, and I'm going to show you how to do this on Phemex. So we can see here that I want to enter my trade at 60,128. So I'm going to go to the Phemex exchange and I'm going to hit the limit over here. Now I've got my leverage preset to isolated 10x leverage, but I'm just going to put in here the amount that I want to enter my trade at. Now the next thing I need to enter is my stop loss. So my stop loss here is at 59,572. Now I'm going to enter my stop loss here, and then I'm going to use this slider. And as I use this slider, pay attention to this number in red right here. You'll see it says when last price reaches 59572, it will trigger a market order and the estimated P&L will be minus, and there's the number. All I need to do is very basic math. My total account balance is up here. So that means whatever number is up here, I can only afford to lose 1% per trade if the trade goes against me. Therefore, if I have a 10,000 USDT account, I can afford to lose $100 per trade. So all I need to do is use this slider until it gets to around the 100 USDT mark. This is how to ensure that you'll only lose around 1% of your total trading balance should the trade go against you. And this is how you properly calculate your risk, as opposed to using the false narrative of the tight stop loss. So let me show you how to do this in the case of a short position. In this example right here, we can see that price came from an uptrend. The trapped traders were formed at the peak formation high. There was a couple of attempts. So on any of these attempts, you could have opened a short position, and your stop loss, in order to be properly placed, needs to go above the trapped traders. which is above this candle here, as it was the highest candle that price has not returned to. For setting the target, you simply look left to see where the last traders were trapped in the opposite direction in the peak formation low, which is this candle right here. We had one attempt, another attempt, and we did not return to that zone. So anywhere in that area would be a really good take profit. And in this case, we now have a 5.8 to 1 risk to reward, meaning if you were to lose 1% if it went the wrong way, you would gain 5.8% if it goes the right way. So it's not about the percentage that price moves. If price were to drop, you can see it's only dropping by 3.3%, but that's just the price movement. That's actually got nothing to do with how much profit you make. So if you're looking for somewhere to trade on, check out Phemex so you can follow the steps that I just showed you to place your trade.
All right, guys. First of all, that is over here. It's in the help desk. I highly recommend you guys watch it over and over again if you have to. But we try to teach it. The only reason I shared that video and someone else who is someone else who actually has her own coaching program. But she's not right a lot as far as I'm concerned in some of her videos on YouTube. But that is the safe way to use stop losses. That is the right way, and that is the best way to do it. So I highly recommend it. That's why we keep that. And I think a lot of you have that same problem when it comes to where to put your stop losses and how far away and all that stuff. You've probably heard me use the term tight stop loss many times. And to me, it's tight, but even with her explanation, it's technically tight. Mine's very tight right now. Look at it, because it's in profit. So she didn't mention anything about moving stop loss into profit or anything like that. But if I were to just follow her example there, where would my stop loss be? It would probably be up here. But I wouldn't be able to use the leverage or the amounts that I'm using. So she's doing it much more cleaner and safer, basically, which is what all you should do when you're new until you get the hang of this. But she was given a very clear-cut example. $10,000 account balance. Let's say you're risking 10% on the trade, which is $1,000. I say this all the time. And then you have a 10% stop loss on that, which is only $100, which means you're only risking 1% of your entire account balance on any given trade. So yeah, I would watch that until you really understand it. You're not going to get it just maybe watching it one time or me sharing it here, but it really is helpful for a lot of people until they really understand it. And I will tell you this, guys, I hate to say it, but you women follow those rules much better than the men do. Men, for some reason, you guys take bigger risks. You're trying to hit home runs a lot, trying to double your account size on one trade a lot. Whereas the women are more systematic and more, methodical when it comes to following these kinds of instructions and sticking to the rules. And that's why if you go into the wins wall, we see, don't get me wrong, we got a lot of guys in here killing it, but we got a lot of women that are not only getting the hang of this, but they're doing very well with consistent wins and gains posted in here. Amy, Nomi, Rose now. I don't know, we got a few other. I was just looking at it the other day and I was like, look, all these girls in here killing it. Angela, say that again. I'm sorry.
Oh, it's just De Niro. Haven't been here in a while. Been swamped with a whole bunch of things and started a couple of businesses. But I was just wanted to, back you up, especially for the new traders, because I joined last November, November 29th to be exact. And us men, speaking for the majority of us, we tend to go on our own. But if you just listen to the video and follow the structure, I know you want to gamble. I wanted to gamble. But when you do that, you'll have more success because you have a strategy. Because without a strategy, especially when it comes to stop loss, you're going to go through the pangs. Yes, you might get some good trades. I had some good ones, and then I had some bad ones. But then when I started to follow it consistently, even if you have more losses, you'll have more ROI on the amount of money. So I just wanted to say that for the new traders, follow the stop loss. I'm telling you, don't worry about the losses. Worry about how much you lost and how much you won. That's all I want to say.
Thank you, sir. Appreciate that. Yeah, I mean, we got a lot of traders in here who learned lessons, and the only reason they learned the lessons is because they stuck to it even after they maybe had some losses, and that's the problem. I think a lot of people, when they have too many losses in a row because they're not doing something right, they don't know what they're doing wrong yet. They haven't quite figured it out yet, but they give up before they learn what they're doing wrong. And usually, it's just a very small tweak. It's just a minor pivot from what they were doing to stop causing that problem. And a habit, guys, first of all, practice doesn't make perfect. Perfect practice makes perfect. If you continue practicing or doing it the wrong way over and over again, you'll only get good at doing it wrong. And so in the beginning, when you're new, we highly recommend that you follow those rules. And, you know, in the step-by-step tutorials, we talk about proper risk management. Chad goes over it a lot as well. Bill goes over it in the basics calls. And I know that sometimes you see me with different trade setups and stuff, and that's the problem. Some people look at my trades and say, oh, I'm just going to do exactly what Nico does. No, don't do that. Follow the rules.
Nico.
Yes.
Yeah. So yeah, I just recently entered into a trade, and it went the wrong way. And I had a loose stop loss, and I thought it was going to turn around, and it looked like it was turning around, and I added some more contracts in to lower my liquidation. And then so I've stayed in this trade. I haven't lost any money yet. But one of the things I've done is I've had to reduce my leverage so that I'm below probably the 89K on this
before you get liquidated. Doug, you muted yourself out. Who was that talking? Was that Doug?
That was me. Sorry. I didn't mean to mute myself out. Yeah, so I have to get well below like 80, 89 before I get liquidated. But I see where the market's going, and I see the possibility of it turning south or going back up. Is it wise just to get out of this trade? I mean, I haven't taken a loss yet, or should I? Because if it turns around, I'll make money. But my break even isn't up until about 100K. So would it be better to do that, or set up a different trade later on in a sub account to go long on?
Right.
I made a few mistakes starting out. I started with thinking it was going to go up sooner, but it's not.
Yeah. So you broke a lot of rules there with that one, but there you know, right?
Absolutely, and I learned a lot.
Yeah. I mean, it's got to get back to 100K before you even break even, which means obviously you don't have a stop loss, and you're just letting it run, and you're hoping that it doesn't go down as low as your liquidation. And I don't know how much you're going to lose if it hits your liquidation. You don't have to share that, but can you continue to push your liquidation away by adding more contracts and lowering your leverage? You can only do that so much. You only have so much money, right? And you can buy your way out of situations like that by depositing more and then adding more contracts, doubling down. But that is also a recipe for disaster, and you can get further and further and further negative until finally you do have to cut the loss. And you're either gonna cut the loss or get liquidated, right? Now, if you cut the loss right now, it could bounce and then climb right back up, and you'll be mad that you cut the loss. If you don't cut the loss and it goes down and hits your liquidation, you'll be mad you didn't cut the loss. You're in one of those situations, right? Damned if you do, damned if you don't. And unfortunately, if you would not be in that trade right now if you would have had a proper stop loss, or even a tight stop loss, obviously, even though we don't like to use that word according to Trade, Travel, and Chill. But tight stop losses, what they do is they do prevent you from losing a lot, but at the same time, they might cause you to get stopped out faster than you should. But when that happens to me, if I'm really confident in the position or in the direction it's going to go, and I use what they technically call a tight stop loss, and I get stopped out, I do re-enter. So in the case, like for the video I just shared, I might have not gotten stopped out if I put my stop loss at the right position, at the right place the first time. But I also, if it does eventually go and hit the target, I may have lost, I don't know, instead of losing $100, and her example was $100 was 1% of your account balance, you lose 200. Okay, but you're making six times that amount if it hits the target. So that is the difference between someone being conservative and someone being kind of technically lazy. But when you let it go too far, I tell the story, Doug, of one time when I did exactly what you just did, and I was leaving to go out to dinner, and I did not have a stop loss, and I was expecting it to go much higher. And by the time I got to the Chinese restaurant and looked at my phone, I was a few $1,000s negative. Okay, well, I was like, oh shit, it's too late now. I'm not going to cut the loss. Let me look and see how far can it go before I'm in trouble. And I had a ways because I was using low leverage and my liquidation was far away. So I actually tried to push it further, added more contracts, did the same thing, added more contracts. Maybe I even increased my leverage, which brought my liquidation closer because I thought we were about to turn. And then I got busy and sidetracked and wasn't paying attention. And I looked again, like 2 hours later, and I was almost $18,000 negative. It literally dropped like a brick through a wet paper bag. It just fell so fast. And I would not have been in that trade if I had a stop loss or was using proper risk management or anything. But then it took over a week for it to climb back up. And it did. And I eventually got out of the trade, and I still cut a loss. I still took a loss because I thought that what happened was it did this. It was in a downward trending channel like this, fell much lower. I was much more negative, and then it climbed up, but it only hit this part, which is in the downward channel. I might have entered way up here. So I knew that it was going to probably come down even further the next time around. But because it came up so much higher, I took that loss instead of this loss down here. So I shortened my loss. I reduced my loss by waiting for it to come back up, but that was still risky because there was no guarantee it was going to come back up. So my point is that I never like to get in those situations anymore because that's too stressful. We don't live long enough to be taking years off of our life by stressing out about having a big loss like that. So in the future, I would just recommend you use proper risk management. And because right now, as we're getting down to that 91, 92 would be a really good entry for you to go long, but you're already long way up at 100. So, I would chill on that one.
Right. I am chilling, and so far I think I have 3% on the trade, which isn't huge for me. My total loss will probably be about $70, which it isn't hurting me. I just would like to position myself better for the next entry, and so I'm not sure if maybe I'll just wait and if it goes all the way, if it comes back a little bit, I'll take less of a loss and then reposition.
Okay, well, I'm glad you told me that. I was worried about you for a minute there. I was worried that it was going to be a huge loss to me. I mean, maybe that can be huge to some people, but I've cut $70 losses many times in my lifetime. But when it gets to thousands, I don't like to cut it. But $70, yeah, I can live with that. I can make that back in 10 minutes when I'm paying attention. But when you're not paying attention and you let things get away from you like that, it's kind of like if I really focused, guys, if I really, really only entered at the most precise time and I got out when I was in profit, I could have a 80, 90, 100% win ratio. I'm just not that, I don't focus that much. And I know that might sound stupid. Why not? Why wouldn't you? Because that would make more sense. It's because not only am I trading, but I'm also teaching and I'm giving examples all the time. And I'm getting in and out sometimes at the worst time just to show someone how to do it. And so I am getting nickeled and dimed sometimes at my own expense just to give a lesson to somebody else. And so that's the predicament I'm in there. But If I were you guys, I wouldn't do that, obviously. I would be a lot more careful. This is the XRP CME gap. Somebody asked me to look at that, and there is one down here. And it's very similar to Bitcoin. So I would say that if Bitcoin fills the CME gap between 91 and 93, this will be filled for XRP right here. No, this was filled. I'm sorry. That was filled. What am I saying? That one was filled right here. So no, I don't see any for XRP at the moment that have not been filled. Let me go back further.
Nico, I saw a video recently that this guy was saying that the market will be manipulated down for Bitcoin as low as $75,000. I always take everything that I hear online as like with a grain of salt, but what is your position on that potential of happening? I mean, I know that you've done some of the projections on how low will it go, but do you think that's even a potential that it would get pulled down to the 75K range before reversing up again?
I mean, listen, guys, I don't say that anything is possible. I say that everything is possible.
Right.
So is it possible? Yes. If we're not in a bear, well, let me put it this way. I said this on a call probably a month ago, 2 months ago, maybe, that 70K is the threshold. We need to stay above 70K in order to stay in this bull market. So that means it could literally go down that far and still us stay in a bull market and bounce all the way back up to 150. So,
right.
But will that happen is the question. I don't think so, because I think getting below the 80 or the 98K, and even now going down to as low as we have here at 94.5, and with the CME gap just a little bit lower right here. CME gap is right here between 91.5 and 93, somewhere in here. We're close to that. And generally speaking, when those get filled, it doesn't mean that's it. It bounces there and climbs back out. Sometimes it fills and then continues in that direction. But I meant to show you that. Hold on. Let me just go back to the CME gap here. Let me just show you. So this is the CME on Bitcoin. This is the gap that has not been filled right here.
Yep.
Between 91 and 93. But let me just show you some other ones. So this one right here, it filled here, and as you can see, it bounced right back up after it filled. Soon as this came down to fill this gap, it bounced. Here's a gap right here, and it filled it right here, but it continued in that direction. Here's a gap right here, filled it right here, and continued down in that direction. So just because it's filling this gap doesn't mean it can't keep going. But a lot of times, especially when it's coming down so far from its upward trending channel, that it could just fill it and bounce. Here's one right here. This was a big one. This is very similar to the one we're facing right now. This same amount of time. So on the way up, after breaking out of major resistance gap, and then we went all the way up to 108K, dropped down to 89, bounced all the way to 109, and then 3 months down, filled it right here, wicked down a little bit lower to retest the 74.5, bounced out. So it filled it, and then that was it, onto the races. Now, did it come down to fill that gap, or did it come down to retest previous resistance? Hard to tell, but we have a similar situation here. So we have a gap, and we also have support. So it could just, did we already bounce on this support? Right there is the support. We just bounced there at 94.5, but I would say it needs to fill this gap. So I think that we're still downward trending in the short term. We're too close to it. This is a nice sharp line. Not only that, but look at this. Not only is it close, but it is bouncing on the downward trending support. But what does that mean? Does that mean it's done? Not necessarily. We could bounce, come over here and hit it here, and then break out. of this downward trending resistance line. Right? Yeah. So, but to answer your question, if it breaks below this, guys, I mean, if it breaks below the 91 or 90, or it dips down into the 80s for whatever reason, is it possible? Yes. If it doesn't pull back up and it literally holds as resistance under here and starts to drop, then yeah, we got an issue. We got an issue. That could mean, it could mean that this was the high. It could mean that. I'm not going to say that that's the case yet, because we got a month and 18 days left for that 12-month candle. When that next candle opens, guys, and let me just show you that one more time. When that next candle opens, it could still go up from there, but it just historically has not gone up higher than the current candle. So let me just show you what I mean is that if we go to the 12-month time frame, bull market top. Am I looking at the right thing here? Bull market top 2013, 1, 2, 3, 4, bull market top 2017, 1, 2, 3, 4, bull market top 2021, 1, 2, 3, 4. We're in that fourth candle now. But look at some of these, guys. We went all the way up to $1,177 in this bull market, came down the last month of the last one. Well, I could say this one opened January 14th. So remember, December 31st, January 14th, the next candle opens. January 1st, rather, I'm sorry, 2013. January 1st, next candle opens, and this candle literally went up first before going down. So it is possible that even if we're down in the 80s or 90s when this candle's done, that would technically mean that 126 was the top, according to history. The next candle opens, the next candle can go up all the way up to 100, 105, 110. But historically, they just didn't get above this candle. Now, could this time be different? Yes. And I want to be clear on this, guys, because I'm not telling you that December 31st, that's it. Because this time could be different. For one thing, there's several different things that could happen. What the first quarter could be a super cycle. In other words, we could have a huge run up based on all of these new ETFs that are in the works, not just for XRP. I mean, we could have an altcoin season that just blows through the roof, even if Bitcoin doesn't do anything. Bitcoin could just stagnate and sit around at 100K and everything else could shoot to the moon. That could happen. Or we could go into a bear market. And is it impossible to go into a bear market? No, that's what happens every time. So far, I mean, let's just be realistic. Every single time we have 1, 2, 3, 4 candles to the top. That's a 4-year cycle. 1 candle to the bottom. That's a 1-year cycle to the bear market. And then 3 more to the top. So a total of 4 candles from top to top. That's 4 years. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. We're in that 4th candle right now, and we got 1 month and 18 days left. So logically, my brain says, okay, well, if history repeats itself, then in 1 month and 18 days, whatever the top of this candle was, that's the top. But that doesn't mean that's where it will be in 1 month and 18 days. I just want you guys to be clear. Be clear on that, because if it comes down to 80 and the next candle opens, 126 was the top, which means that if you didn't short at 126 and you're just now going to short the bear market at 80, okay, that's fine. But that's, keep in mind, that's $40,000 lower than the top. But if you short now thinking that 126 is the top, you could be dead wrong, because in the next month and 18 days, we could shoot up to 150. And then why should it? And that's another thing I wanted to be clear on, is that historically also, guys, these candles back here right before they ended had a parabolic move to the upside in November and December. So November and December is when we get the biggest pumps to the upside. But we're already halfway through November. So, and we're dropping, but that doesn't mean we can't just all of a sudden reverse. Let's go down and show you a lower time frame. I'm going to look at different. I'm going to show you some different things to look out for. So here we are on the 10-minute. I'm gonna go to the hour, a little easier. This is a problem though. These two upward trending lines right here, guys, are the long running upward trending support lines. And we did break below them and retest. And then we came down to 90, where is it? 98 right here. Boom. And 98 was a long running support line and resistance going all the way back. Watch. Resistance, resistance, support and resistance, 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 support, 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 resistance, 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 support, 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 breakthrough, whoops, breakthrough, resistance, breakthrough, holding as resistance, and then dropping. Okay, so we're back under a major support and resistance level, and we're under the overall upward trending support. If I go to the daily or the weekly and show you that, these two blue lines, I mean the blue line and the yellow line, that's this. That's this long running, this yellow line is this long running support line going from 49K all the way up, and we broke through it and retested as resistance. This blue line is a major long running support and resistance line going all the way back. Whoops, I don't even have it in the right spot. To 2011. I got to adjust it. It needs to come up. Hold on a second. So we have resistance, support, 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 resistance, 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 resistance. We are under that line right now. And historically, we only been under it once here, and that was the last bear market. After the bull market top at 68K, we got under it here, and that was from 21K down to 15. And then from 15 all the way back up to 55K before we got back above it, and then we came back below it again. So we've been under it pretty much this whole bull market. So I don't know what that means. I don't know what that means on that one, but I will tell you this: when we look at the bull market by itself, just from this bull market to now, let's just get rid of all these other ones. This red line, just this bull market, from the bull market bottom, we've touched, bounced, hit a high, touched, bounced, and then we broke through it here. So we are below the upward trending support line still. Either way, that's not necessarily bullish in the short term. This line right here is the 98K, and we're breaking that. So the next one down, guys, is 73.5. That's the next support down, except for the CME, which is right here. So hopefully we just wick through the CME and bounce and get back above the 98 and get back above this upward trending support. We got a ways to go to get up there. We'd have to get right back up to like 119. And yeah, so I mean, I'm just giving it to you like I see it. I'm not trying to be negative or bearish or anything. I'm just I don't want it to stop. Shit. This blue line up here is the 178 line. That is the 1.6 on the Fibonacci. And by the way, that's another thing, guys. We've hit that, the 1.6 on the Fib. We've hit that every bull market. Every single bull market before this one. There's only been 3. This is the 4th bull market. We've hit the 1.6 on the Fib. If we hit it, that'll be 178 approximately. 66% of the time, we hit the 2.36, which would bring us up to this line. 555,000 for Bitcoin. 66% of the time we hit that. 100% of the time we hit this. But this time we have not yet. Is it possible that we don't this time? I guess everything is possible. But, you know, like I always say, guys, you got to look at history and say, I mean, you can see I do a lot of technical analysis. I look at everything to try to figure these things out. And, you know, the longest running trend line going back to 2011, we're below it right now. And we've been below it pretty much this whole bull market, which is strange. But is it a good thing or a bad thing? I don't know. I don't know if it means anything anymore, to be honest with you. That one. But this the upward trending bull market support line, we just broke below it. That's usually not what we want to see. All right, so let's look at the previous. Let's look at the previous bear market bottom right here and look at the upward trending support line. Above it, above it, above it, above it, above it, break. Could not get back above it. And that was the beginning of a bear market. You can look at the one before that. Every time we go from a bear market bottom and we break the upward trending support, bull market top, this, and then we come down and break through it. We retested this one. We retested, but we didn't get back above it. So bear market.
Nico, I share my chart with him for the weekly. If you go on the weekly, what he said is like clear. It's just crystal clear, unless if they decide to pump it up. Because I think I was reading something that say look to your left and you can see what's going on your right. So if you check the weekly, the 74 is like crystal clear.
Yeah, this is the weekly I'm on right now, and the 74 is that was previous. That was an all-time high.
You can see my you see my I just posted my chart.
No, where did you put it?
I put it on the group, the main chat, and also in the chat that we are in the Zoom chat right now.
The main chat, like in our Discord group?
Yes. And then I posted earlier in this one too.
Let me just scroll up and see if I see it in here.
Yeah.
Otherwise,
you can see a little bit clearer because I'm on.
Okay. All right, I found it.
Yeah. See what I'm talking about? Like it's possible. It's like
yeah, I see what you're looking at, and you're right. That would be the next
yeah.
level.
It might be, we don't know.
Yeah, it's basically this line right here. Or,
yeah, if you look to your left, let's say you can predict what's going to happen on your right. It might bounce back and go that if it goes that way, but they can do whatever they want.
Yeah.
So
Chad and I say that all the time. If you want to know where the support is or the resistance, just look to the left.
Yes.
Unless we're in all-time high territory. In other words, if we're already above, like if we were to move up here, you can't look to the left because there is no history up here. So it's all new. It's all no man's land. But when you come back down below history, you can always look to the left and see what is. And this is why 112 was so important, guys. When we were over here at the 112. That was major resistance and support for a while. We stayed above it, but as soon as we got below it, then we looked at the next support line, which is 98. And then we get below that, we look at the next one, which is the CME gap here. And then we look below that, the next one is down here at 73.8, 74. Yep.
It's scary. We don't want that. We want bull market, but the chart is saying something might happen anytime.
Yeah. So yeah, in fact, I'm going to make that a zone rather than just a straight line at 73. I would say it's the zone. That could be the bear market bottom, guys. That could be because this is the previous all-time high from 2021, right here at 68K. And we retested at 74.5 because this is when we broke the previous all-time high right here at 73.8. And then we retested here, 74.5 and bounced out. I don't want to believe that we're done. I don't want to believe that this is bear market time because we did got a month and a half left, month and 20 days approximately. And historically speaking, if I go back to, let me go to the monthly. You go to the monthly so you can see the last big push to the upside. In fact, I got a better chart for this. Hold on. Bull market tops, guys. Right here, November, boom, November, shooting up to right here, December 1st, dropping. That was starting to drop at the end of the year. Look at this one right here, December, November, look at this. I mean, this is huge pumps. Big drop right here. Look at this. This is like what we're doing right now. Big drop. We're up here right now. We dropped. This is September. We start to climb up. October. Boom, November shoots way up. That's like a 40, November, December, like a 40% pump to the upside in the last 2 months of a bull market. Same here. And then where we're at right now, we could see that in November, we could see a huge pump to the upside in the last 2 months, only because historically it's done that. I only went back to this one here, which was 2017, but let me go back even further. November, this whole candle right here is just the month of November. And December stayed, went up, the next candle opened here in December, and it went up equal to that one before dropping. But as you can see, bull market top right here. November, not December. December is when it started to drop. So, but can we say that it's the same thing's gonna happen this time just because that's what happened in the last bull markets? No. That's the thing I want to get clear with you guys. It doesn't mean that history will always continue to repeat. I always say it's like the trend is your friend till the end. And if I'm going to bet, I'm going to bet on the thing that's consistently been happening. In other words, bull and bear market cycles have consistently been
You
happening.
can turn it.
since the
Well,
beginning.
not this one. The other one, you can turn it to where you can.
Tammy's phone, I'm going to mute you out. Bull and bear market cycles have happened historically, and they've been very predictable. Does it mean they will always? No, it doesn't. But if I'm going to have to bet, if you're going to give me a choice, well, is this time going to be different, or are we going to do the same thing that we've always done? I will have to bet first on what's always happened. I want it to change. I want this to be different. I want us to have a parabolic move to the upside. I want us to have a super cycle and go to $1 million for Bitcoin. That's hopium. What I have to look at is what's always happened. It's like, I always give this example. It's like you got somebody who's always a person of their word. They always do what they say, and they tell you they're going to be at your house, pick you up at 6 p.m. And they do that every week, and they've been doing that for years. They pick you up at 6 p.m. every week. Are you going, and they're always on time, honking the horn. Are you going to just out of the blue say, yeah, but I think this time is going to be different. I think they're not going to be on time this time. For some reason, I just don't think. No, you're going to bet that they're going to show up on time. But is it possible that they don't? Yes, it's possible they have a car accident on the way. They get a flat tire, or somebody hits them, or they get pulled over, whatever. It's possible that they don't show up on time this time. So I'm going to bet that they are, because they always do. But at the same time, I am prepared for them not, just in case, right? So right now, I have to look at what the chart's telling me. The chart's telling me we're dropping below major support, and we're going away from all-time high at the moment. The all-time high was 126. We're already at 95, guys. That is $20,000. $20,000 drop from the all-time high from where we were just a few short weeks ago. Let's just go look at it right here. From right here, I'm going to draw a price range. From there to here, that's 25%. Now, is that unusual? No. 25% drops happen all the time. And in the middle of a bull market and on the way up. Here's one right here. Look, we pumped up to here, boom, dropped 22%. I mean, I can show you dozens of them back to back. We pumped up to here, dropped 21%. We pumped up to here, dropped 22%. This one here, we pumped up to here and dropped 22%. Over and over and over again. Oh, here's one. We pumped up to there and dropped 32% before pumping up higher. We pumped up to here and dropped 31%. And we just pumped up to here, and we are now down 25%. Very typical, right? So the only difference, guys, is that we broke the upward trending support line. All these other times we were above it. And right now we just broke it. So what does that mean? I don't know yet. Does it mean it's the beginning of the bear market? I don't want to believe that. Maybe we're just coming down to retest. Maybe this is just a big fake out, a big shakeout. We're coming down to fill the CME gap, and we're going to pump and climb and have a big parabolic move to the upside. That's like my friend pulling up at 6:05, and he's not here yet. He's always here at 6. I don't want to believe he's not showing up. He didn't text me and tell me he's not showing up. There's no other indication that he's not showing up. Maybe this time is just a little different. Maybe he's going to show up any minute. In other words, maybe this is going to wick down and pump back up really quick. Let's look at the,
Nick.
Yeah, go ahead.
Yeah, sorry. Can we check a little bit on XRP? Like basically, is it a good time to get in? What does the future hold? Do we go short? Do we go long? Is there any particular magic number that we're waiting for just to see what's going on?
Yeah, this is XRP right here. And we are in a very long running downward trending channel from up here at the top. This is like Bitcoin's 126 up here. This is XRP's 366. That's when we got the 366, July 17th to July 20th. And then we just started this descent back down. We had this huge wick down, same with Bitcoin, pump back up into this channel. We're still in the channel, but we're in now what looks like a little bit of an upward trending support line inside the downward trending channel. So what does that mean? Well, I mean, we could wind into this apex and then break out to the upside, and then this downward trending channel will be no longer, or we could fall through this anytime, retest as resistance and come down to the bottom. And I would suspect that that's if Bitcoin does what we think it's going to do, that's what's going to happen here. And I think $2 for XRP would be the bottom. Bitcoin hitting the CME gap at 90 to 91K at the lowest, somewhere between 91.5 and 93, wicking into that. And then this would cause XRP to probably drop down to this line, double, hitting it again, bouncing. And then hopefully we're out. Hopefully Bitcoin is going to bounce and come back up, and XRP and everything comes back up. So this is a great time to buy. Like if you're hodling and just holding XRP, I've been buying on this whole way down. And, I probably bought more yesterday or today. And if this drops again,
So basically what you're saying at this moment, it's not a good idea to either go long or short. We're waiting. Is that what I'm understanding?
I mean, let's just go over to my, this is my Phemex. Let's scroll down. I am long and short in both XRP and Bitcoin because I'm hedging, but I don't necessarily recommend that for you guys. I don't give hedge signals in the group because it's very risky. But the reason why I am short is because I was already long, and I still am embedding on this pump to the upside. And I was long in anticipation of XRP's many different ETFs being approved and launching, and all of the positive news around XRP getting ready. I think November 20th or 21st or 22nd are big news days for XRP in the financial worlds. And so I'm still anticipating a big move to the upside. The only reason I shorted in the short term is to hedge my loss in case it just continues to drop. In other words, if I'm shorting and it's going profitable on my shorts, I'm negative on my longs. I'm going negative on my longs, but if I'm able to at least ease the pain a little bit in the short term, because I still am anticipating a big pump to the upside. I'm doing what I just told Doug not to do a little while ago, right? But I have more money and more money at risk and more leverage and I have the ability to transfer more money in here from my spot account in case I need to lower my liquidation. But as you can see, my liquidation is nowhere in sight. This is an XRP margin. I mean, this is the XRP margin right here. And I am long and short at the same time on USDT. So what I will do on this one right here, which is the XRP margin, is that I am waiting to go long. So once it bounces here, I will probably go long with an XRP margin as well. I don't generally trade on an XRP margin because it's very risky. I don't want to lose XRP, but I will.
At what price would you recommend to start going long if we're not in right now? Like, what's the number that we're waiting for in order to maybe start going long?
$2, 205, between 2 and 205.
Got it. Thanks.
You're welcome. Liga, let's see what you got here. Liga, I thought my charts were messy. Holy cow! Look at some of Liga's posts in the trading chat over here. Let me just go back and let me go look. It's kind of funny, but I know what you're saying, but I'm sure a lot of new people are like, what the hell is that? Let's go back and look. Let's go look at some of Liga's artwork. There it is. Liga. Look at this one. Can you explain this to me, Liga? Are you on?
Yeah, I'm here.
All right, I'm just picking on you. But it's I know what you're saying here. You're showing a big M pattern, and but what are you saying here? What are you seeing?
It's just about
Down. You're seeing a drop down to this line right here is what you're talking about, and you're right. I mean, it already wicked down to there.
Well, I drew that volume profile from the 1010 liquidation. So it's been bouncing between the point of control, the value area low and the value area high for a while. It's been ranging ever since. So it's basically just keeps hitting those numbers. It goes from the low to the high, to the POC, to the high, to the low. So theoretically, it would go back up probably to the point of control again, if it doesn't break the range, which it hasn't yet.
I agree. Yes, I agree.
So, but Bitcoin did break the range last night. I took that trade at like 3:30 in the morning, but it, I don't know how much further it's going to go, but it did break that upward trending line like you were talking about.
Yeah. Okay. I see your description here also. And now look at this, the one you just posted. This is Bitcoin.
So yeah, it's right at the edge of the volume profile is where it wicked exactly to.
Yeah.
And there's a descending support line, which it could theoretically bounce up from there. Otherwise, the target is way lower, like you were saying.
Yeah. All right. Good. Thanks. So you're confirming what I'm saying.
Yeah.
Looks like. Because I did talk about that that downward trending. Any more questions on XRP before we exit out of here? I'm very bullish on XRP, guys. I have a lot of XRP.
I have one.
Say again. Go ahead.
I have one. It's. Have you heard? I thought I heard Jake mention that XRP was going to be delisted after December 5th off of Coinbase. Have you know anything about that?
I have not heard that. No, I would not expect that. I don't. I would like to see him say that. I mean, there are a lot of scam videos out there, guys. Be very careful.
I know that. That's why I'm asking you, because I know you're probably in tune a little better. And I know, I get a friend request from him every day. I'm sure he's searching me out.
Yeah, it's definitely not him. First of all, I don't think there's any plan for them to delist anything. You would be notified if you have any XRP on Coinbase. Coinbase would notify you if they were delisting something. They would let you know that on such and such date, this token will be delisted, because they're giving you an opportunity to convert, sell, or transfer out of there. They would do that. They did it before. They did that with XRP back in 2018.
I just Googled it. It's I don't see any trace of it that happening. And I don't anticipate it, because I think, why would you at this point? It's a massive income for them.
They're not. I don't think they are. And by the way, I've seen the founder or the president of Coinbase speaking right alongside of Jake at some of these events, and they're they're all big proponents of XRP. They're all very bullish on it. They all agree with what they think is going to happen in the financial world. Not just him, but speaking on stage with like Federal Reserve chairs, people that absolutely know what's happening behind the scenes. And so that's why I'm bullish on it. It's not Jake. Jake, there's probably more scam videos of Jake than there are real videos of Jake out there. But now, is it possible for them to delist it eventually? Yes. Why would they? Well, it'll become a liquidity issue or the government says we need all the XRP, to safeguard the financial network or system, kind of like what they did with gold back in the 1930s or whatever it was, where they went on the gold, they took off the gold standard and they wanted everybody's gold. You guys remember that? Well, you guys don't remember that, but I mean, in history, you probably learned that you had a choice to turn your gold in or it be confiscated. And if you turn it in, they're going to pay you $25 an ounce. As soon as they got all the gold, they relisted, they reevaluated it and repriced it at $35 an ounce. Yes, Bill.
One of the greatest thefts to the population known to man by the government.
Yeah.
Other than income taxes.
Yeah. Now there were some
There.
people that didn't turn in their gold and hid their gold and buried their gold, and obviously they probably fared better than the rest. So how do you hide your gold in this case? You have cold storage wallets, Web3-based wallets, where they can't take it from you. If it's listed on an exchange, then yes. Now, if it comes to a point where you can't sell, there's always going to be a demand for XRP. If there's a supply issue and you can't buy it anywhere, guess what? Demand goes through the roof. Okay. And so there's always going to be governments or big whales and institutions that will be happy to buy your XRP, and probably even more than the current value. Imagine
Now,
that.
now those cold storage things that you're talking about, that's those little devices, right?
Cold storage wallet. Yeah. Web-based. You want a web-based cold storage wallet. I think there's hard cold storage wallets that are not web-based, meaning you're not connected to the internet. I don't know if you want that or not. I mean, I've been hearing some misleading or conflicting information about that. It's got to be DeFi Web3 decentralized based, because you will need to possibly sell or transfer or convert. So let's just say XRP goes to $1,000. Let's say you got $5 million of XRP, but you don't have it on an exchange, but you want to liquidate or you want to convert it to something else. You're going to have to send that somewhere. You might have to send it to, let's say, Phemex or Gemini or Coinbase or anywhere, somewhere where you're going to need to convert it. You definitely want to be able to do it on a decentralized platform. So, you can certainly do it on Phemex. You can do it on, I think there's several other, I can't think off the top of my head, Nexo. There's a bunch of different ones out there. You can even borrow against it. There's platforms. There's a bank right now, guys. I think I posted it in the group. This is a very popular bank throughout Georgia and some of the northern states. Right here, I posted a video right here. SoFi. Anybody bank at SoFi? Go ahead.
I was going to tell you with gold that people buy 1933 or before, because there is a law that they can't ask you for anything above 1933 or above after taking the go for the World War. Then you couldn't have gold at all in the 70s. Long story short, they made another rule that if it was pre-1933 or above, the government can never ask you for that again. So people buy pre-1933.
Oh, interesting. Yeah. I have a good friend who owns a coin. He's a coin dealer. Yeah, it's a jewelry store, but he's a coin broker and a coin dealer. He has all kinds of crazy stuff. You can buy $10,000 bills and $1,000 bills and all this silver certificates and gold bullion and gold coins. So he's got just piles and piles of this stuff. He's got a 50-pound or 60 or 70-pound silver bar on the table, open to anybody. It's like, if you can steal that, you can have it. You can't even pick this thing up. It's ridiculous. You're gonna break your back trying to pick it up. But yeah, it's interesting stuff, guys. But what I was saying is SoFi, which is a popular bank. My mother has an account there. It's out of Georgia. They're going to be offering, just like I've been telling you guys, all the major banks are going to be offering you with your checking account. You'll be able to hold Bitcoin, Solana, XRP, Ethereum, that kind of stuff. PayPal's been doing it for a long time. Cash App does it. Banks are finally coming around, and they will be custodians. They will loan against that as collateral. So I wouldn't worry too much about all the cold storage wallet. I mean, I think it's safer to have it in cold wallet, guys. By the way, onboarding right now, guys. If you're brand new in this group, get on onboarding. Bill posted the link in the Zoom chat. It's starting right now. It's 2:00, right? Bill, you already posted. So there's the link. He just posted it in the Zoom chat, but he also posted it in the Discord, in the main chat, in the trade chat right here. There it is, onboarding for new members, 2 p.m., and also in the announcements channel right here. So get on that if you're brand new. You don't need to stay on this call. I'm going to end this call now anyway in a couple minutes. And so, but I just want to let you guys know that the banks are coming around. They want to use your crypto. They want to be able to charge interest. They want to loan you money against it. They want to collateralize. It is a thing. They're not trying to steal it from you. I'm a conspiracy person, but conspiracy facts. I mean, I don't mind talking about whether we landed on the moon or whether the earth is flat or round. It doesn't, those are all good questions. I'm not closed-minded to not even consider the possibility that those are true. But when it comes to, I'm 57 years old and I've never yet in my life had money taken from me from a bank or a financial institution. I've never had it, but could it happen? Yes, I guess. Could we have a run on the banks? Yes, it has happened in other countries, happens all the time, just hasn't happened to us yet. But that doesn't mean it's not possible. So I'm not going to overly concern myself with it. I mean, I'm friends, first name basis, cell phone number texting with my banker at Chase Bank. I mean, I'm in with them, my accountant, CPAs, all these guys, you know, they're trying to give me money all the time. They're trying to loan me money. They're trying to get me to buy more apartments. They're trying to always loan. They make their money on giving you money, loaning you money, not giving you, but loaning you, right? They always offer me all these other, VIP services and shit. And, you know, it's almost like they're salespeople. They're basically pimping out their products, right, at the bank. And so could I take them up on it? Could I take another line of credit? Sure, I can. But does that help me? It can. It can help me if you use it right. Help me get richer. In fact, everybody I know who is rich uses a lot of credit and a lot of loans and a lot of financing. Are there people that get rich the old-fashioned way and buy Dogecoin at a penny? Is that really the old-fashioned way? No, that's the new way. Very few people are getting rich the new way right now. But the old-fashioned way is leverage. It's always been leverage, guys, though. It's always been leverage. Borrowing, taking mortgages or refinancing, pulling out equity, tax-free, reinvesting. That's how it's been. And you're going to be able to do that with crypto now too. You're going to be able to borrow against your crypto. And so I'm not overly worried about Coinbase cutting me off or stealing my XRP. But just to be on the safe side, I have an equal amount of XRP somewhere else in cold storage. But I still have some on Coinbase. I don't have any problem with Coinbase. I've never had a problem with Coinbase. But it is centralized. Just keep that in mind. Not your keys, not your crypto. All that stuff that they always say is true. But are they out to get you? I don't think so. I think they need you in order to make money.
Is Descent a decentralized web-based?
Yes. Was that a question?
Yeah.
What's the question?
Is Descent wallet?
Oh, Descent. Yeah, Descent wallet is decentralized Web3, web-based. Yes.
Okay. Yeah, I keep getting these people contacting me, wanting me to put it in some kind of exchange, and I keep telling them I got that Descent, and they say, "Oh, well, then I'll walk you through the process and how to put it in there." And it's like, you can screw off. That's just crazy.
No, that's a scam. I don't know why you're getting messages out of the blue from people.
Yeah.
Okay, those are scammers. They're trying to give you their wallets to send things to.
Yeah, I know. It's stupid.
Yeah. Guys, you don't need help doing this. You don't need anybody. You don't need Jake Claver. You don't need anybody to be a depository or a custodian for your money. That's for most people who want to put their money in with BlackRock or an ETF and let someone else manage it for them. Like the majority of the people out there, the doctors, the dentists, the lawyer, they don't have time to do all this stuff. But if you learn how to open your own accounts, create your own wallets, and store your own crypto in your own Web3 based cold storage wallets, then you are becoming your own banker. You do not need all the banks. Okay. But some people are intimidated by that. I understand. If you want to trust a custodian to do it for you, I mean, if Chase Bank starts to offer crypto accounts and lending product services rather against crypto, will I use it? Probably. I will probably eventually use it. Why not? If I'm going to continue to get 40, 60, 80% a year growth on my Bitcoin, but you're going to let me borrow up to 50% against it at 8% per year, there's something called an arbitrage that I'm willing to pay. Yes, I will. Justin, what do you talk about? You're blocked for 30 minutes. I don't know what you mean. You got to be very specific in your comments or questions. I can't get in on board. Oh, I see. You said that before. Did you click the Zoom link?
Yes, sir, I did.
I'm sorry, I didn't mean to. Let me just click it. I mean, maybe because you're still on this call. Did you get off this one?
I did, sir. Yeah, I tried to put in the passcode 3 times or 4 times, and then it blocked me for 30 minutes. And I did it through the email that was sent to me by Chad and through the text too.
You're likely putting in the crypto pass. It's probably asking you to log into your Zoom account, and it's asking for your Zoom account passcode, and you're putting in the meeting passcode, but you're obviously
I put
here
in
on
my-
this Zoom meeting. Did you try, were you on a different device?
No, I'm trying from my cell phone. I exited out of this Zoom and then I tried, I put in my email that it asked for and then the passcode and then it locked me out.
Yeah, it was asking you for the passcode to your email for your Zoom account, not the meeting.
Okay. My
Can
apologies on
you,
that.
no, you're good. Can you send me a
don't
screenshot?
apologize.
Like if you go to that meeting, that same link, take a screenshot of the prompt that it gives you where it said that you're locked out. Or
Let's see here.
let me see.
You know what I always do is I just go to school and go to calendar, scroll to today's date, and you can click on that Zoom call. It'll say either basics or whatever. You click on it and then the link is right there. You don't have to enter a password or anything.
Well, that's how I entered this onboard call was through the school app.
Yeah, you could do that with all the other Zoom calls as well.
Yeah, he also posted a link in the Discord, and that's just a direct Zoom link. It should open right up to the call. Let me do this. Oh shit, I can't do it on this screen. Let me see if I can open it up on another.
Let me try to go to Discord.
What about under announcements?
Announcements or the he just posted it also in the trade channel. I mean the trade chat channel. All right, let me just copy the link. He also posted it in this. Let me see if I can open it up on a different browser. Sometimes it does not let me. Yeah, it tells if I want to join it, it's telling me I got to leave this Zoom in order to join the other one because I'm already on Zoom, obviously. So it's not letting me do it. But there's no password or anything I got to log into because I'm already logged into Zoom. So I think that Chad might be right in what he's telling you to do there, but I'm not sure.
Yeah, I've seen it a couple times where it's asking people get a little confused. It's having them log into their Zoom account, and instead of putting the password to their Zoom account in, they're putting the password to the Zoom meeting in there. So I've seen it quite a few times, and
yeah,
that would probably make sense why you got locked if you kept putting the wrong password in over and over.
Maybe try it on a different device and not even log in. Just be an anonymous, one of the Zoom users.
Yeah, log off of here, clear your cache if you can. You said you're doing it on your phone, so maybe that, I don't know, maybe totally log out and log back in or something. I don't know. I don't know what problem you're having. I should just come up and say connect to meeting. Keith says try incognito window. All right, so listen, guys. I apologize, Justin. Well, hopefully we'll get you worked out there. But I got 125 people on here who aren't having that issue right now. So let me just answer some more questions, and we'll let you go, guys. William, is Decent safe to store your XRP and other crypto assets for now, or does more to be done for your crypto assets to be safe? Please let me know. I use it. I mean, there's not much more you can do, really. Just don't give anybody your passwords, your seed phrases. Don't answer any of these text messages out of the blue telling you that your account's been compromised. Call this number, or somebody's trying. Are you the one trying to withdraw money from Coinbase? Click this link. Never, never, ever respond to those texts or emails. That is not Coinbase. Those are not real. Those are scams. And I know it's hard. Well, how do I know which one to trust? Don't trust any of them ever.
Yeah.
It's that simple. If you think if you're wondering if it's really Coinbase, then log into Coinbase and see if you have a warning, or if you have or look at your email. You got a real email from Coinbase, or contact Coinbase support and ask them, did you text me this? And they will say no. So there's always a way to verify that, guys. But just don't immediately respond. So many people fall for that stuff and get taken, and they sound really good on the phone. They sound really legitimate. Chad did a fake call with them, pretending to be a victim and pretending to be let them scam him, pretending to let them scam him, right? And he went on with them for like 30 minutes, and it was crazy how sophisticated they are. They know exactly how to ask the question. So, but just don't fall for it, guys. There's so many scams out there. It's not even funny. Always verify and always block those texts and those numbers. Whatever you're getting the number, the call from or the text from, scroll down to where it says block or, spam or whatever, and just block it. So that way, hopefully you stop getting them from those same people over and over again.
The real obvious piece is if you never use a generic password across multiple accounts. That would be the only way somebody would end up getting into your Coinbase account or what have you, and then you get a warning from Coinbase that somebody tried logging in. If you're using passwords that are unique across all platforms and you have two-factor authenticator on, the likelihood of somebody getting into your account is extremely low. The only way they would is if they malwared into your computer and got in that way.
Yeah, they got to hack your own home PC. And like if I go and log into Coinbase, I got 2FA, I got Google Authenticator and text SMS. And if I do it from my phone, I got facial recognition. Got all kinds of different things to protect you. But I get those texts all the time from Coinbase, supposed Coinbase, all the time. And just delete, block, delete, block. It's never true. Pilar, Nico, do you think buying the new XRP ETF is worth it in a regular stock account? I mean, can you make money? Yes, over time. But would you make a lot more money just owning XRP? Yes. I would rather own the asset that they're trading in. The difference is that you with the ETFs, guys, you limit your risk more, but you also greatly limit your gains and you reduce your potential profit by lowering your risk. I personally would rather own the asset itself.
Seems like you're paying a premium for the ETF version as well.
Yeah, because they got to make their fees. That's another thing. You got a middleman, you got a broker, basically, and they're making money on you. Everything that happens there, they're getting a percentage of. Whereas if you just buy XRP yourself and hold it yourself in a cold storage wallet, you're getting all the potential of the upside, taking all the risk of the downside, but getting all the potential of the upside, but without any middleman sharing in any benefit.
And XRP is only $3, not even $3.
That's correct.
The ETF, it's like 13 to 15 bucks.
Is that so?
That's what I looked at yesterday.
There's a reason for that. Okay, they already baked in the current price. That's going to tell you guys where the price is going, I think.
Yep, 13 to 14. Here we come.
So Pilar, I personally hold it directly. Yes, you already know how to do that, right? I mean, I know I've helped you before in the past with that, but if you can hold it directly, I would rather you do that. Okay, good. Buy more. Just keep buying. I would say keep buying, guys. I am. I mean, you don't have to do what I'm doing, but I am. That it could be a risk. I mean, could XRP just go to zero and all of a sudden they're not going to use it? It's not going to ever turn into what we think it is. I doubt it. I doubt it. All those things that have to happen are already in. Yeah, go ahead. Go ahead. Someone was saying
How
something?
do you buy XRP on Phemex?
You convert USDT to XRP.
I did that, and I have some, but that price never changes. So I'm just wondering if I did it right.
Hold on one second. Let me just go over here. I'm gonna share my screen and show you.
If I go to my overview and then go to futures, then I can see it over here. But doesn't that it shows my balance, but that number never changes. If it goes down, it doesn't change. If it goes up, it doesn't change. I'm just
Okay, so are you in your spot account
no futures.
and you have XRP in your futures account
Yes,
and it shows an amount?
yes.
Okay.
It shows my balance.
Like right here, it says total amount available.
I'm pretty sure I bought 100. I bought 100 XRP at when it was just under $3 or just around $3. So it shows my balance here, like 33. It shows 33 USDT or dollars or whatever that is, I guess. But
you bought 100. You bought 100 XRP, is what you're saying?
Yes, I wanted to check it out.
Okay.
That
Let's just
may
say
be
you
the
bought
number
100.
of coins he's got.
Yeah, if you bought 100 XRP at, let's just say $2.80, then you got
I bought it at $3.
$3. So you got $300 worth of XRP, right? You bought 100 XRP at $3. That's $300 worth.
No, I bought $100 XRP. Sorry.
Oh.
So that's 33. I guess.
I got you. Okay. I got you. Okay. So you bought $100 worth.
I converted $100. That's what I wanted. I wanted to try it out.
$33 and 33.33 XRP. Let's just say 33. Let's just say you got 33 XRP. So you're saying that the total amount of XRP doesn't change, or the price, the value of it?
Well, my balance doesn't change, but now, okay, I get it. Sorry, that's my mistake.
No, that's okay. Because
my balance is 33 XRP. It's not the USD dollar amount. That's why it doesn't change.
Right. So unless you're trading, unless you're trading, you're always going to have 33. If you don't buy any more, you're always going to have 33. What will change is the value of it. So if it goes up to $100 per XRP, then instead of the 100, if it goes up to $100 per XRP, let's just say hypothetical, and you got 33, then you'll still have 33 XRP, but the total value now will be $3,300.
So I can convert that XRP, 33 XRP back to USDT? If I do it now, I'm basically going to lose because it's at 220 or whatever, right?
That's correct. That's correct.
Okay, now I get it.
See over here on the right, all you got to do is hit the convert button and you can convert it back. Here's XRP. I can convert it back. If I clicked on that right now, I can click on this. I go from XRP. Where is it? XRP. And I want to convert it to USDT, let's just say.
Or whatever. Yeah, that's what I did.
There it is. And then you click max, or you click however much you want it to convert, whatever the case may be.
Yeah.
I don't keep much of it in my spot because it's not doing me any good sitting in my spot. I do have spot wallets, technically speaking. Spot is, you can trade spot, it's just no leverage. But I use cold storage wallet, which I'm not trading and I'm just accumulating. So I'm not risking any of that XRP on trades. I'm just growing the quantity of XRP that I have. And then if XRP does eventually have a supersonic move to the upside, then the XRP that I have there will just be more valuable. But if I want to go long with XRP with a leveraged position, you got to put that into your futures account and you actually have to make a trade with it. So that would look like this. Let me go back. Let me just share my screen real quick one more time. That would look like this. I would have to go over to my trading platform, coin margin, and then go to XRP margin. So I'm on a coin margin, XRP margin, right? And as you can see up here, it says XRP USD, XRP margin. Then I would make a long position here. Let's see, I got 20. Let's see if I'm at 5X. I'm going to keep my leverage low because you're going to have closer liquidation on XRP. What I was saying is that if XRP gets down and drops down to this $2 range, then I will do a long XRP margin trade, not just USDT, but also with XRP, because then I will be growing as this starts to go. Unless, I mean, guys, just imagine if you happen to just have, I don't know, $500 worth of XRP and you go long at 5x leverage, hypothetical, right? Let's just see what would happen. And you wait till it hits $2 here, boom, and you go long. And let's just say you happen to time this right, and this is the time that XRP is going to break out and XRPs are going to go live, and boom, all of a sudden we shoot up and XRP just pumps and gets up into this $6, $7, $8, $9, $10 range. Let's just go to $10 right there. Boom, $10. That is a 396% move to the upside, right? 396 right there, 396%. Okay. Let's just do some math. You got 5,000, what are they? $500 worth of XRP.
So that would be 1,000. No, that would be 250 XRP.
Times $10 per XRP is 5,000, and you're at 5x leveraged. Right? You just turn your $5 into 25,000. What did you say? I'm sorry.
Sorry. Do that calculation again.
You got $500 worth of XRP, which right now is let's just say $2.30, right? So you got $500 worth. $500 in XRP. If XRP went to $10, that would be $500 times 10, right? Sorry. Let me redo that. $500 divided by $2.31 equals 216 XRP. Let me redo that. I apologize. 216 XRP times $10 equals $2,164 worth. If that's all you had right now, right? That would be 200 XRP. So, and then if you went long, that's $2,164 times 396%. That would be the same. That's what it would bring you to. But you're at 5x leverage, so that would be $10,000. That's turning basically. Shit, hold on, I'm confusing myself here. You got at the current price. At the current price, if you had $500 worth, I think I had it right the first time. If you had $500 worth, and it's $2.31, that means that's $500 divided by $2.31. That means you have 216 XRP. 216 XRP, right? Because 216 XRP times $2.31 is $500. Okay. So.
And then you multiply that by 300% or whatever.
If it goes to $10 per XRP and you got 230 XRP, that's $2,300. But if you went long,
no, that's here, XRP. No, is that not XRP? Because you converted 500.
Well, that's only if you're in a long position. I'm talking about just the value of what you have. So if you have 231 XRP and it goes to $10, and it's just sitting in your wallet, 231 XRP, it goes to $10 per XRP, that would be $231 times 10. So you'd have $2,300 worth of XRP at $10 per XRP. But and that's just if you're just sitting on it doing nothing. You just went up 5x or whatever it is. But if you went long instead with $500 worth is what I was saying, but let's just say $231 worth. Oh, no, it's 230 XRP, and it went up 390%. 231 XRP times $2.31. Oops. Brain's not working today. Times $2.31. 231 XRP times $2.31 equals $533. That's what you currently have down here. But you go long and it goes up to $10. So $533, this is what I said the first time, times 396% equals $2,113 times 5x leverage. That's $10,565. So your $500 worth down here turns into $10,500 worth up here. You still have the, only thing that happened is now, I'm sorry, you did earn more XRP on the way up because you're trading on an XRP margin, right? So, but now you have $10,000 worth of XRP. Let me go back here. So the amount of XRP you just gained 914 XRP. Does that make sense? Yeah. You add the 900, you add the original amount that you had, the $514 or something to that, and you're close to $10,000 worth. So you're making more XRP when you're trading with leverage. If you're just buying it and sitting on it, then you just have to wait for the value to go up. But if you're going long with XRP as an XRP margin and the value goes up, so let's just take that a little step further. You got $1,000 worth of XRP down here, and XRP goes up to $25 per XRP. That's 1,141% gain. $1,000 worth times 1,141%. That's 11,410. And if you would have taken that trade at, let's say, 20x leverage, that would be a $228,000 that you now have worth of XRP from $1,000. So that's a big difference, because if you just sat on $1,000 in your wallet and it went up to $25 per XRP, that would only be $25,000. But $1,000 at 20x leverage going up that far would be $228,000.
Sorry, I gotta research that. It's a bit confusing still, but that's fine.
It's confusing, but leverage is a multiplier, guys. So it's depending on the amount of leverage. So what is happening here is that if this went up 1,190%, let's just make it 1,200% just to be right on the nose here, be easier. If it went up 1,200% and you only had $1,000 worth of it, then your $1,000 would now be worth 1,200% more. That's with no leverage. Okay. 1,200%. That's a 1,200% move to the upside. So $1,000 times 1,200% is a 12x. Your $1,000 worth of XRP is now worth 12,000. But if you were at 20x leverage, then what happens is you take that 1,200% and multiply that by 20. You just made 24,000% on your $1,000. So that's that's $1,000 times 24,000%, 240,000. The leverage, what it does is it multiplies the percentage gain. So if the market only moves up 5% and you're at 10x leverage, that's 5% times 10. If it moves up 1,200% and you're at 20x leverage, that's 1,200% times 20. William, I use Descent. And I thought I could have sworn we went over that a couple times. A few to choose from. Okay. I use Coinbase, Descent, Phemex. I got crypto.com. I got blockchain.com. I got Bitcoin. I got shit all over the place. I still have a Gemini account. I think I have a Kraken account, but I don't really store a lot in those places. I just have those accounts in case I need to move stuff around. Decent is the one. You don't really need multiple cold storage wallets unless you don't trust yourself. Thanks, Joe. Appreciate that. Coin M would be for XRP. I don't think you can do it for BTC. No, you can't. On a coin margin, Pablo, you're trading in the coin. So if you're trading XRP on a coin margin, you can trade all of these on a coin margin. All of these right here. Whoops. You got Bitcoin, Solana, Ethereum. Whoops, let me go over there. Coin margin. Solana, Bitcoin, XRP, Solana, ETH, SUI, Cardano, Link, and AVAX. All of these can be traded on a coin margin. If you trade Bitcoin on a coin margin, which I do often, which I am right now, I'm in trades right now. That means when I make money, when I make a gain, I'm making Bitcoin. I'm not making USDT. When I lose, I'm losing Bitcoin. I'm not losing US dollar. If you want to trade on a, but you cannot trade XRP on a Bitcoin margin. You cannot trade Bitcoin on an XRP margin if that's what you're asking. It's all pegged to the dollar. So you're either trading US dollar or USDT. On a coin margin, you are trading against US dollar. Ledger hard wallets are safe, but they're not the safest. Cold storage wallet is safer. A Ledger's hard wallet, I think that's considered a hot wallet, like a MetaMask or a Trust wallet. It's still safer than the centralized exchange. All right, guys. I gotta run. I gotta get ready. I got another appointment, and tomorrow morning I gotta drive all the way to Miami, which is a 4-hour drive. I guess I could fly, but I'm going to be interviewed on Scott Clary's podcast, which is one of the biggest ones in the entrepreneurial space. Kind of excited about that, but at the same time, it's a little annoying because I don't really feel like driving for 4 hours there and 4 hours back. But
Good, you'd take your helicopter.
got to do what you got to do sometimes. Yeah, I wish.
That's just around the corner in Texas.
Yeah, all right, 4 hours. I know. True. I drove through Texas once. It took 24 hours just to get through it, coming from California. I drove to Texas once from here, from Tampa Bay. It was like, I don't know, 16-hour drive. Crazy. Houston. Yeah, so this guy.
Yeah, you can drive 4 hours in Houston and still be in Houston.
Put the link in one of the announcement pages or something so we can watch you on the podcast.
For a few weeks after the interview, but it'll be published on his YouTube channel and in Apple iTunes and all that stuff. It's a pretty big one. It's called the Success Story Podcast with Scott Clary, and he's got about, I don't know, 3.5 million downloads a month, something like that. He's one of the top podcasts out there. His YouTube channel's got about 400,000 subscribers, but it'll be on both of those. I just did one recently with Trading Nuts or Trading Nut. I think they're out of Australia. They're a very big podcaster out in Australia. And I wasn't even expecting much from that, but he's got a few 100,000 subscribers as well on his YouTube channel. And I've gotten hundreds of DMs just since that aired the other day. of people wanting to learn more about what we do here. So, thank you, Liga. Yep, Scott. Yeah, I'll just share this screenshot. This is what the guy looks like right here. You guys want to look into it?
What?
That's a video, so I can't scroll. All right, guys, I got to wrap it up. I got to decide whether I want to drive down there or not or reschedule, but I think I got to do it. I think I got to do it. Michael, what's your question? How do I get one of those bitchin' hats you're wearing? I'll show you. I will show you. I'm not dodging, man. I'm not dodging. If you go in.
Make sure you wear all your merc when you get over there. Have your shirt, your hat. All that good stuff.
Right? All right, look. If you go in to the Discord, into the official links channel, and scroll up, we do have a Crypto Renegades shop. If you click on that, it will take you to the Crypto Renegades shop where there is all kinds of shirts, hats, tanks, coffee mugs, model not included. So that's where you can get it if you want to pay for it. Now, I have been telling people, you know, if you comment on my YouTube channels and like kind of help out there, go to YouTube and give me a like on these videos. It kind of helps stoke the algorithms and send me your DM me in the Discord your IUD number for Phemex. I am sending people, you know, sporadically here and there little crypto to just as a thank you. It's not a bribe. I'm not bribing you. In fact, if you want to do it just to help out, by all means do it. You don't have to send me your, you know, DM me your IUD. But if you send me your IUD, I am thanking everybody. But I'm also going to eventually be giving creating a discount code for this shop that if you want anything here and I do a giveaway or whatever you want, you know, I'm not giving away a huge amount of money just to like my YouTube channel or like a video. I'm not, you know, just, you know, a little thank you here and there, but I will be giving a discount code away. So if you come here and you want a hat and you click on to order it, it's $32 for this hat, and you click add to cart, and then you go to checkout, you can put the code in right here, the discount code, and it will be free minus the shipping cost. Okay. But you got to have the code. And I'm trying to get our website guy to give me the code so I can start sharing that with people as a thank you gift and for giveaways and things like that. So I am working on that. So just send me a DM if that's something you would want. I'm going to do it. Just do it. Constantine, just do it.
Hey, Nico,
Yes,
is there any way to rewatch what this webinar?
The one we're on right now?
Yeah.
Yes. All of these live trainings are live streamed, recorded, and posted into the private Facebook group, which you should have got access to if you are a member.
Yep.
Let me go over here. And that looks like this.
I had emergency. I had to run out. So
yeah,
I missed
no
about
problem.
40 minutes. When I came back, I was like, oh, my computer's almost dead too. Okay.
Yeah, no problem. That's why we record them all, so that when we post them in here in the private Facebook group, you just scroll down. This is the one, the team Zoom call from Wednesday. This one is the team Zoom call from Monday. This one's last Friday. This one is Bill's call. This one's my call. This one's you know, Chad's got his calls in here. So they're all in here. You can always go watch the replays.
Oh, okay, great. Awesome.
When this one's done, when we're done and we hang up here, I will post this one in here as well.
Okay. Sounds great. Thank you.
You're welcome. All right, guys, I got to wrap it up. Have a great rest of your day. What I'm going to do, though, just so you know, is that I am keeping an eye on this. I think we still can drop and are dropping. Let's just go look, take one last look here before I get off. Let's just take a look where we're at. As we said.
Are you still in? Are you going in?
You talking to me? Who are you talking to? Huh? James, I think you're talking to someone else. I am not still in whatever you're talking about. So here we are on the 1 hour. And we are still, I mean, we did come below that orange line, like I said, and we retested it as resistance and dropping, and we came down and double bottomed right now so far. We just hit this line, boom, and possibly again. But I think we're going to break through this, guys, and we're going to probably I think we're too close to the CME gap to not fill it. So I think we're probably going to come down to the 90K, somewhere in this 91K range before the end of this weekend. This could happen over the coming hours or day or by tomorrow or Sunday, and hopefully bounce out of here and get back out. If I think we're going to break below this, I'll do an emergency live call if I see that happening, but I'm hoping that doesn't happen, guys. But we are below the upward trending support line. So we got everything converging right here. You can see it clearly. We got the downward trending support, this orange line. We got the horizontal support, which is this yellow line, the 98K, and we got the upward trending support line, all coming to converge right here. And we broke all three of them. We are below all three of them right now. That's not necessarily good, but at the same time, could it be just so that we can clear this CME gap and bounce out? It could be. We'll see. We'll see. I mean, we are below this line right now, and that's a little concerning, but this could be the big shakeout before the big pump as well. I've seen it happen many times. No one was expecting this on the 10th either. Look at this. Right? So, and we're slowly, gradually climbing down. And what does that mean? That means that the slower and more gradual it takes, the closer we're getting to a bottom. And the smaller the wicks get. The smaller the wicks get, smaller, it's getting tighter and tighter and tighter, more likely that a bounce is imminent. It's just going to work its way down to whatever and then bounce out. Usually when they're really long and fast is when you can't control that drop and you don't really know where the bottom is. So just keep that in mind. So I'll keep you updated on what I see. I'll post any changes, maybe do a cell phone update video either later tonight. But that right now, I think that's where we're going to, somewhere in this blue zone down here between 91 and 93 in the short term. And if we break below that, I will definitely go live and let you know, or do a video and let you know what I think. But after that, Rose might be right. We could have, we could be coming down to this line down here. This would be the first one at 78K and then 74.5 here. But I'm not overly worried about that right now. I want to see us bounce here and get back above this line, get back above these three lines. This downward trending orange line, this yellow line, and this red one. If we can bounce back above that, wick down here, boom, bounce back above that. That looks like it's a below all this for a while. But if we go to the higher time frames, it won't hardly look like anything. It'll just look like this. Whoops. And totally seeable. I can see it. I can see that happening. Maybe one more candle, boom, and then up.
Yep.
All right. I hope that's what happened, guys. But this is not a game of hopium. Even though that's what I want to happen, doesn't mean it will. And I'm going to say it like it is. Whatever I see happening, I will post it and I will let you know what I think is going to happen. It's not a matter of what I hope will happen. It's just, it is what it is. We gotta, they say that men lie, women lie, but the charts don't lie, guys. So we got to go by what the chart is showing. That's not what people are saying is going to happen. Even with XRP, I think XRP might go to $1,000 someday, but I got to look at the charts. The chart's telling me right now it's dropping. Is it a shakeout? Is it the calm before the storm? Is it going to take everybody out? People are going to get fed up and pissed and say, "Oh, this sucks," and then close out their accounts and sell all their crypto, and then boom, then it shoots up. That happens more than you would think. That is what usually happens. So just hold tight. Don't sell your XRP or your Bitcoin, okay? Especially if you're accumulating for the long run.
Thank you, Nico.
All right, guys. Have a great rest of your day and your weekend. I will see you in the main chat. If you have any questions, just ask it in the main chat, and I'll talk to you later.
All right, have a good one.
You too.